All right, guys. Let me know how the volume is. Let me know if you can hear. You should be good. Hit that like button as you come in. All right, guys. Let me get the music rolling as well. All right, so we got a lot of stuff happening today. We got jobless claims numbers getting released this morning. We've got Jerome Powell speaking at 9:10 a.m. We've got GameStop earnings that happened yesterday. We had Bed Bath and Beyond bounce back up some, and so we just had a lot of stuff going on today already. What's up, Tiny? Good morning. Hey, glad you're up early. Um, Here is some of the stuff we're looking at. Here is GameStop on the left. You can see the SPY. You see Bed Bath and Beyond here. Not really anything too crazy happening on those fronts. See if I can skip some of this music. Can y'all hear the music? Let me know. Hey, what's up, Christopher? Morning's good. What's up, Gary? Hey, what's up, Stan? Yeah, honestly, we got a lot of stuff happening today, man. I'm gonna put some other charts up. We got Jerome Powell speaking. We got GameStop dropping earnings yesterday and moving up some. We got Bed Bath and Beyond kind of coming back some here. We got the SPY. All right, team. So yeah, we got the SPY up here right around break even. We had a huge green day yesterday, so like we'll see if this craziness continues. To be honest, because yesterday we had a huge green day in the market, which is great. That's what we want to see. To be honest, we don't want to see, um, you know, anything negative like that. The dollar is dropping, which is what we want here. We don't want to see the dollar move up. We want to see the dollar drop and tank essentially here. And that's kind of what we've been getting here. Like here's trading view. Here's the dollar. You can see mostly sideways, but we are dropping some short term. If we look like a 5-day chart here, this is the 6th of September. This is the 7th. This is the 8th. Starting today was right here. So the dollar is mostly break even since the 8th. Not really anything that happened there yet, but dollar dropped a lot yesterday, which is good. You know, All right, GameStop did drop earnings, and they dropped a deal with FTX as well. So, bro, the problem with so many monitors is that you just keep so much stuff up, bro. You just kind of, like, I got so many things up at one time. There we go, that's better. All right. All right, guys. So yeah, so I have 4 schemes. Hey, nice, Tiny. Morning. Will Jay Powell pull the rug on the market today? I don't know, bro. We'll see, man. It'll be interesting to watch. Like, we'll see. Jobless claims data is getting released today at 8:30. Expectational numbers for initial jobless claims is 235. Last it was 232. Continuing claims. They don't have expectational numbers, but they do have what they were last time, which is 1.44 million. Continuing claims last time. Jerome Powell speaking at 9:10 a.m. We've got a consumer expenditures at 10. Not really any big earnings today, I don't think. We got F-Cell earnings, DocuSign earnings this evening, but nothing big enough to really, be worthwhile. And then tomorrow is Friday. Monday, yeah, we just don't have any big earnings releases coming up, which is unfortunate. Not next week either. So next week is slow too. We got like Adobe. Monday of next week we get some stuff started, but nothing really big. Kind of looking at everything else. We got ACB earnings, Stitch Fix earnings Tuesday, and then Wednesday General Mills, KB Homes, Thursday. Yeah, the big earnings season doesn't start. We got Costco earnings, not this week, but the next week. So the next 2 weeks are going to be slow for earnings. October is when the big earnings usually are going to be, it looks like. Okay, Thursday we got BlackBerry. Nothing else this big. We're gonna have to look at we got some fundamental data coming out this week though. That's gonna be big. So while we don't have that many earnings coming out in the next week or so, we've got some big fundamental data releases that are gonna be huge. Specifically, CPI dropping, FOMC meeting dropping over the next couple weeks, and then the week after that will be kind of slow. We will have some small earnings reports to go over. Okay, we got like MU and Nike on the 29th, so that one's nice. So we got something going on every week this week. Tuesday. Yeah, SPY started to creep back up a little bit. We are holding some positions right now. So we are holding some stuff right now. TMG, the metal company. Levi's. Wednesday. Yeah, so Bed Bath, guys. I guess the question is, like, how do we think Bed Bath is going to be able to bounce back? All right, so early next month, we got some stuff dropping. JP Morgan, Citigroup, Game, Bank of America, Goldman Sachs. Yeah, so again, the question here, I didn't even do my Twitter post today, so let me get started here. So we're going to do our poll. Jobless claims and Jerome Powell's speech today. Calls or puts? This will be interesting to see what we get. Again, GameStop earnings yesterday as well. I think CPI will go down, but I also think that we'll see a 100 basis point increase as far as yesterday's gains. They kept bounce. We'll see. CPI numbers next week. Yeah, that's right. What's up, John? What's up, Ricky? Yeah, let me know, guys. We're going to do a poll here as we normally do. The market have a positive effect. How does the reaction to the Jay Powell speech? Yes or no? Will the market have a positive reaction to the Jay Powell speech? I'm just going to say with the markets, have a positive reaction to the Jay Powell speech. Yes or no? Vote on that poll. Let us know. There's the poll going live. We're also going to do a Twitter poll. As we normally do. I haven't even had a sip of my coffee yet, so let me take a sip. All right, guys. So, hey, what's up, Kryptonite? I think CPI will go down, but I also think that we see, yeah, maybe. Again, SPY at 397.70. Here's GameStop at 26.20s here, dipping down a little bit. GameStop announced an FTX deal yesterday. So let me know if you think that's good or bad for the market. Yeah, so Jerome Powell is going to speak at 9:10 New York City time. So 9:10 Eastern Standard is when he's going to speak. So, we'll see what the market does to that. How about that Apple conference yesterday, man? Apple, just craziness for Apple as well. So just huge rips. All right, guys. So we do have jobless claims numbers getting released today. Apple conference sucks, worst ever. We watched it last night. Apple 14 to sell for 1100 without SIM card. Galaxy to the rescue. Hey, I've already got a Galaxy, bro. So I mean, it's already something that I already have. You know. All right, so we're doing our normal Twitter poll as we do here. Guys, and yeah, Jerome Powell. We got our Twitter poll going live as well here. You can vote on our regular poll, but here's our Twitter poll. We consider it a favor if you give us a vote on this poll if you have not already. I'm still rocking a Note 20. I got this. I have this Android Z Fold that I use, you know, so I can kind of use it, close it, open it. Just a cool phone, man. Still hasn't ruined. Yesterday is a giant bull trap. Powell is dropping a deuce on the economy. So massive that. Hey, we'll see, bro. Like I said, man, I hope you're wrong, sir. I hope you're wrong. I hope the market holds. You got to understand, the market was a little bit oversold leading into yesterday. You know, the reality of it is people have been calling doom and gloom for a long time now, and only this year were they right. I've been trading every year for 5 years. I have seen people say, oh, the market's going to crash this year. Every year, you know what keywords are trending? That year and market crash, right? So last year, 2021 market crash. The year before that, 2020 market crash. The year before that, 2019 market crash, so forth and so on. I'm waiting for new releases. Let's see, man. And again, vote on the poll here. Will the markets have a positive reaction to Jay Powell's speech? To the Jay Powell speech? Let me know. 67% so far out of 42 votes, which is pretty sizable considering this was 5 minutes ago. Say no. 33% say yes. Vote on that poll. Let us know, guys. Here's the SPY. Again, we do have GameStop right here. We are holding GameStop. GameStop had the FTX crypto news. So FTX crypto news making it pop. Hey, what's up, JoJo? Good morning. Good morning. The U.S. has approved $675 million in additional military aid. I'm waiting for new releases. Yeah, hey, it'll be fun. Again, today we have jobless claims numbers dropping today. So that's kind of what we got on the board today. Jobless claims, continuing claims are coming out. We also have, let me look at Bloomberg. Their economic calendar is usually a little bit more in depth than Market Watch's. No offense to Market Watch, but when you look at these economic calendars, Bloomberg is kind of the better one. All right, and yeah, guys, so today we got continuing claims, jobless claims, 4-week average, initial jobless claims coming out. Fed Chair Powell is speaking at 9:10. We got natural gas storage coming out at 10:30. Crude oil inventories at 11. Crude oil imports at 11. So some other stuff going on today. Friday, tomorrow, we don't really have anything big. We got George speaking, Fed Waller speaking, wholesale inventories dropping at 10. Nothing else really going down tomorrow. And tomorrow will probably be a slow day. Hopefully we get some news to talk about, though. I need to dip at the open, then we can moon. Hey, we'll see. Are you talking about GameStop? I'm assuming, Chris. Hey, what's up, Bob? All right, guys. So Apple, good reaction, positive reaction to this, though. So Apple actually had a pretty good reaction. AMC is actually moving up as well. Some. We had a pretty good day yesterday. You know, we made some money in we're holding GameStop. We made some money in GameStop on that huge rip that we got. Again, we bought that TQQQ. I need to dip at the open, then we can moon. The TQQQ is just the mini Q, right? This is just the mini Q. Again, the question is, are we oversold heading into the open? You know, I think it's understandable to consider that. I think that, you know, we ripped up huge amounts yesterday. Hey, what's up, Paulo? Hey, good morning to you as well, brother. Hope you're doing good, man. I see the S&P 500 to 3,500 by Christmas. I don't know, bro. That's a big dip. It's a big drop. I hope you're wrong, sir. Good move on ASAN. Yeah, ASAN dropped earnings as well, and they had positive earnings yesterday. They did really well. They reacted really positive. You see, they're up to almost 23 bucks. If we look at the catalyst here from this, all right, guys. So I'm looking at some catalysts here. Nothing too crazy. Again, are y'all bullish or bearish on the J Powell speech today? Do you hedge your large positions, all your positions, some, none? Some, not all, for sure. Some, but definitely not none. Definitely not all. What's your thoughts on GSAT? GSAT's interesting. This one was, I think, one of the first company that was rumored to. Somebody said this yesterday. This is one of the first companies that was actually rumored to have a deal with Amazon that actually had a deal with Amazon. And so yesterday they flew up after the conference up to almost $3 a share, pulling back a little bit now. All right, guys. Yeah, we'll see if we get some good action here. Bed Bath is at 780s. Again, remember, next week we do have the CPI report coming out. That's going to be huge. The week after that, we've got the FOMC meeting. That's going to be big, too. So a lot of stuff happening. A lot of stuff coming out. We'll see if we get something interesting. I think we'll see a bit more of a drop before CPI, at least to 3,800-ish. And if it's below estimates again, then the market will likely bottom and start moving higher. Yeah. So again, if it's below estimates, I mean, that's two consecutive less than expectational results. So if it's below expectations, that's good. Then that'll be very optimism building is the best way I can describe it. So yeah, if we come in lower than expected in terms of inflationary data, again, that's amazing and great, and we'll see if we get some good action. All right, guys. What do y'all think about the GameStop FTX deal? GameStop reported an FTX deal yesterday. They posted better than expected EPS, worse than expected sales, and again, a big deal with FTX. All right, the partnership is intended to introduce more GameStop customers to FTX and its marketplace for digital assets, GameStop said in a statement here. So this is essentially what GameStop said. I mean, I think that's a good deal with FTX. I think the FTX deal is good. I think that's a solid deal for them. All right, guys. So GSAT trying to make a move. All right, guys. So, yeah, Bed Bath up to 780s. We got GameStop still down at 26s here. Let's take a look at the SPY. So here's the SPY right here. SPY is technically green on the day. And again, hopefully we get some favorable action. Tesla, we can take a look at Tesla here. Let's glance at this. Here's Tesla here. We also have Apple that we're going to take a look at. Apple just went crazy after this meeting here. Apple just flew. SPY is at 398.02s. So let's see if the SPY can break 400 today. I think that'll be the big news. If the SPY can break 400, that'll be amazing. Hey, yeah, man. Honestly, most of the time it's too early to send kids to school anyway, bro. Like, one of the things I really disagree with schooling here, and I think this is something that the older generations got wrong, if you want me to be honest with this. Like, for me as an adult, right? Like, I can get up at 4 a.m. if I need to. and be pretty okay. I by the time 3, 4 o'clock in the evening hits, I'm usually kind of sleepy and groggy and tired. But like I can get it done if I need to get it done. The problem is that kids grip like whenever a kid is growing, like when a kid is getting older and older, they need more sleep than we do, right? So making a kid wake up at 6 a.m. in the morning, 5:30 in the morning to start getting ready as like a young kid or teenager is just not the right move. It's bad for their development. It's bad for their brains. They need that rest, right? If anything, they're not going to be able to think correctly if you make them get up that early because their brains are still developing. And so with that, I don't know why we make our kids get up at 6 a.m., 5:30. It just doesn't make any sense. It's not healthy for them. And you can say, oh, well, they got to learn to get up. But it's like, it's not about that. It's about how their brains are developing at those ages. They need the most sleep they possibly can, to give them good brain function. And, if you're making them get up at 5 a.m., 5:30, it's just not the right move. Maybe, yeah. But how hard is it for a kid to go to bed early, bro? Yeah, but Tesla, man, making moves. Let's see if we can break 300. I think it's possible that we could break 3. We'll see. So Bbby had earnings today? Is that right? Did Bbby have earnings? No. Oh, wait, let me go back. Today is Thursday. Oh, we did have Bbby. Bbby had earnings. Look at the SPY pop. SPY popping up here. It's at 398.30 here. So the SPY's running a little bit right now. There's Bbby. Bbby all the way down to 22.15s. So Bbby running up, or Bbby crashing down here. Again, thank you to my man. Joshua for dropping this non-gap EPS of minus 74 cents, missed by 10 cents, revenue of 732.4 or 0.9 million, beat by 29 million. So mixed results for BILIA are taking down here. We also had FCell, I believe, today, right? FCell, yeah, we had FCell earnings. They expected a 6-cent loss per share. They ended up showing. FCell ended up showing. Let's see what they did. They might not have dropped their numbers yet. So FCell drops their results today too. FCell numbers are going to be coming out at 7:30. So it's 6:40, 6:50 right now. But yeah, Tesla moving up. Aapl, man, Aapl going absolutely crazy, all the way back up to 156s. Yeah. I used to walk 6 miles in the snow to school, with one shoe, back in my day. But no, so Aapl up to 156.20s. 156.20s. Bed Bath at 7:30 or 7:80 right now. So let's see if Bed Bath can get up there. Gamestop right around $26. We talked about 26 yesterday. We'll see if it holds. Tesla up to 284.20s here. And we do have Jerome Powell today. We have jobless claims numbers getting released in about an hour and 10 minutes or so. Or no, really, it's 6:30 right now. They're coming out in about 2 hours, which is all good and fine. And then Jerome Powell is going to be speaking at 9:10 this morning. Be ready. We're going to be covering that live as it happens as well. And again, vote on the poll on what you think is going on with those. We did this so far on the poll on Twitter. We got 47.1% saying calls, 53% saying puts. If we look at the YouTube stream here, we got about 98 votes. Y'all give it a vote. Let's break 100 votes real quick just to get kind of a pool of 100 opinions here. Will the markets have a positive reaction to the Jay Powell speech today? 61% think no. The markets are not going to react positively. 39% think yes, the market will react positively. I had a paper route dad maybe get up at 4 a.m. and ruin my life. Stock market for me. Hey, look at Tesla, guys. Tesla just ripped up to 284.60s. So Tesla ripping here. Let's see if it continues. Yeah, and I get it, responsibilities, and I understand that. What I'm trying to tell you guys, though, is that it's not about, oh, they should just work harder. The previous generations just work so hard, and, the kids nowadays just don't work hard enough. That's not what it's about, man. It's really not about that. What it's about is that if you want the kids to learn the most, you want the kids to actually learn stuff. You want them to retain their knowledge that they're learning in school. You can't have them get up at 5 a.m. You know, they're not going to retain the first half of the day. They're going to be groggy, sleepy. And from my own experience, that's true. I would go to bed early, but you wake me up as a teenager. If you woke me up at 4 or 5 a.m., I'm sleeping in the first hour, you know. And it's like, you can't really knock kids for that. Maybe I'm biased. But if you want them to retain the stuff they're learning, you know, at a certain point, like, listen, high school students is fine, you know. But, like, when you start to get, like, sorry, I'm trying to light this candle. It's taking a little bit more. Tesla pop it up. Apple rip it up. This is probably going to drag the market up, which is great here. Is this candle done? I think my candle's over with, bro. I'm kind of sad. All I got is a Christmas candle left. Yeah, I guess this one's over with. I think this one's probably over with too. We're just gonna have to go with the eucalyptus one. But yeah, Tesla pop it up. It's at 284.70s, 284.70s. Apple up to 156.20s. We also have Bed Bath trying to make moves. The SPY is probably moving up with these, but Apple, Tesla, both ripping up solid here. Looking strong. Does the markets want a firm inflation control? Potentially. Yeah, man. All right, so to put this into perspective, guys, here's the question marks regarding the Jay Powell meeting. All right, so here's the things to consider for this. All right, number one is that the market right now has had a huge rip up leading into this Jay Powell speech. You know, the market ripped up big, all the way back up to $400. Prior to yesterday, we were at about 380s. 388s, 387s, 388s, 388 were the lows. So 388.30 were the lows. So we were at about 390. We are back up about $9 a share now. About $9 a share on the SPY. You know, and so we're up a sizable percentage over the past day alone. And that might lead to some people considering it extended on the upside, and we might have an overbought reaction to some of this, which might indicate drops from Jerome Powell. Again, maybe I'm wrong here. I could be wrong. But we have moved up sizably over the last day, mostly from the Apple meeting, from the dollar dropping, and a lot of other kind of nuanced things there. If we look at the market, though, market's been pretty much dropping the last 20 days. Market's dropped very heavily. You know, last 20 days, market's gone back from on the 16th of August. So, you know, really about 3 weeks ago, you know, the SPY was at 830s, 832s. And it dropped all the way down to 388s, which is a sizable percentage drop. It's not a small drop. And so short term, you know, there could be some arguments for being overbought. You know, could be some arguments for a potential bull trap from yesterday's bullish run. But there could also be some arguments longer term, not long term, but I would say longer term on being oversold on the downside. Now, again, last time JP spoke was during the Jackson Hole Symposium conference, and he tanked the markets. The markets got absolutely tanked from that, which was, I believe it was last Friday. You know, I believe it was last Friday. I think it was right here on the 26th of August. This looks like what it was, right? So you can see this big drop where the market dropped all the way from 420, everybody's favorite number, all the way down to roughly 405. So about $15 a share. Again, we bounced about $10 a share just in the last day or so. But that's kind of things to consider here, is that we already got some pretty sizable drops in the SPY. The SPY dropped all the way down from 420 all the way down to like 405 during the last Jay Powell conference. And the question is he going to do it again? Is the market's going to drop again? Vote on the poll right now. We got 120 votes. 59% think no, we're not going to react positively. 41% think yes, we are going to react positively. Yeah, let me know what you guys think. I'm hoping we get a positive reaction. With all of these, I'm cautiously optimistic. I don't ever want to see the market do poorly. I don't ever want to see the market do bad. You know, we got some people that just want the market to tank because of short-term positions, but people need to understand that if you're any type of sizable investor, any type of sizable trader, or any type of sizable investor, if you got any type of sizable 401k amount or anything like that, the market tanking is bad for you. You know, you might be having some short-term bets that you want to be right on, but, you know, in the end, I am always wanting the market to do well. I never want the market to do poorly. I always want the market to succeed, and because that's good for everybody. And if the market drops, people suffer. And I might short the market when it drops, but, you know, I still want the market. I hope I'm wrong in that regard, you know, but we'll see. And again, what's your plan for today, guys? How did you guys do yesterday? Did you guys end green? Let me know. Yeah, neutral option on the poll. GameStop, guys. Again, their FTX deal is at 26.20s right now. 26.20s. It's a pullback of years. 2020 is really setting us up for the next 10 years of great gains. Yeah, I mean, we'll see. Again, the question is, are you going to average into this dip? Uh, you know, are you, if the market does dip, are you buying? I guess is the real question here. Let me know. If you're buying the dip. If it does dip, are you buying it, guys? I'm going to open up our Discord here. Again, Bed Bath & Beyond at 780s. Let me know if you're buying that. All right, guys. I don't want the market to drop, but Powell's committed to getting inflation under control. Yeah, we'll see. And again, here's the reality of it, right? With inflation issues, the more aggressive the Fed is in terms of inflation, and the Fed does meet in the next couple weeks to raise rates or lower rates or whatever, they're going to raise rates 75 basis points. Almost certainly is what people are expecting. At least they're expecting 75 basis point rate hike. With that said, CPI is also next week, so we come in better than expected in inflationary data. We'll see how the Fed reacts with the FOMC meeting. They're all going to be correlated with each other. And again, Tuesday of next week, we have the CPI data release, which is always big, always a big thing. And hopefully we get a positive reaction. Y'all do me a favor, hit the like button. Hopefully we get lower than expected inflationary data. I mean, that's the goal, is to get lower than expected inflation data. But again, I'm not saying that's going to happen. That's what we hope to happen. It doesn't mean it will. And yeah, Jerome Powell's supposed to speak at 9:10 a.m. 9:10 a.m. We'll see what kind of market activity we get from this. I don't think Jay Powell will say anything to sway the market sentiment today. Whew, man, I don't think so. I think he certainly will. I think he always says at least something that's gonna influence markets. I don't know. I cut my Intel position, a couple days ago. It's just at a certain point, Intel was just dropping, and even with yesterday, like yesterday was like a decent day for equities, and Intel really didn't move up that much. So it's just kind of. I cut my Intel position. We might add back to it, but in terms of like swing trading accuracy, we're doing pretty well. We made money on Snap, we made money on Apple, we lost money on Intel, we made money on Bed Bath, we made money on GameStop, we made money on Neo, we made money on Disney, and so yeah, we've been having some pretty good results for our swing trading. But Intel was kind of the one red trade that we got involved with there. Jobless claims data coming out at 8:30. Okay, gotcha. I'll check it out. $15 for 20 chicken nuggets. Where? Yeah, I got you. Yeah, jobless claims data coming out at 8:30 Eastern time. Dude, I love the Zelda one, bro. You got Zelda and Final Fantasy, bro. Some of my favorite games, dude. I never really finished Final Fantasy, but I definitely watched. Zelda was my game. I remember the Final Fantasy. I think it was for PlayStation 1, right? The Final Fantasy. I think it was like 7 for PlayStation 1. I played that game so much. It was like my favorite. It was my favorite RPG game outside of Zelda. And I can't remember where we like teamed up. I remember I beat the game on Final Fantasy, but I never played more games aside from that. But yeah, I love it. All right, guys. So Tesla bouncing at the previous closing price here. So let's see if we get a little dip involved. I can trade now. So trading is open for me now. So jobless claims data. What's up, Levi? Yeah, I think Intel will probably. I think Intel is probably going to be okay long term. I think if I held it long term, it'd be fine. To be honest, what I truly think I did was I think I scaled a little bit too heavy into it, and so I just ended up cutting it. I ended up buying like 150 to 200 shares of Intel, and I just noticed that I lost like 250 on the trade. I just noticed I was in a little bit too heavy, you know. I think I got a little bit overzealous with the averaging into my positions with it, unfortunately. And it's all good. Like I said, I could be honest with it because I made so much money on my swing trades outside of Intel that, you know, I can be honest about Intel, you know. Again, I've made some pretty good swing trading, trades in the past couple months. And so we're going to keep swing trading, of course. I'm a value guy. Like I look for extended stuff on the downside that looks cheap and I buy those dips. You know, I also look for short-term extension on the downside as well. You know, if something can get really beat up one day, you know, I think a lot of times the likelihood that it's going to bounce back is much, much better. You know, it wasn't too bad. I mean, when you consider just on my Snapchat trade alone, I made like a couple $100 just on Snapchat alone. I made money on Apple. I made money on Disney. I made money on one other one. And so when you put all that into perspective, a $250 loss on Intel, you know, while it sucked, you know, it wasn't the end of the world. I got really lucky with Snapchat, though, to be honest. If you look at Snapchat here, I bought Snapchat and averaged in. I think I did it really smart, to be honest. I think I got lucky because they had a good catalyst that dropped. But I also think it was smart. I think when Snapchat started to drop down to like $8, like down here, I was like, oh man, this is obvious value. And I just started loading up into it on these dips. So I started loading into Snapchat. Really, it was days before that. I would average in, because once it got down to like $8, I'm sitting there like, okay, there's obvious value here. This is obviously oversold on the downside. Snapchat has hundreds and hundreds of millions of daily active users, and so with that, I thought there was value at 8. And so once it hit 8, I was like, man, I'm adding heavy into this, and I did, and then it spiked up the very next. Like I think it spiked up that day. I think I started to do that here. And then they announced I can't remember what the Snapchat deal was. It was some type of deal with another company, and that thing just flew. So yeah, made a lot on that trade. What kind of GameStop price action do we expect today? I'm holding GameStop. I hope GameStop just holds $26. You know, I think that, there could be some other stuff happening, but for me personally, in my position, I just want to see it hold $26. I think $26 has been confirmed previously. In that, I think it was down at $26 right before the big, or right after the big run. Right before on this level was at $26. So short term, I just want to see it hold 26 and 25 maybe as well. 25 might be a psychological number, but I'm gonna hold it. I'm not gonna sell it right now. I'm gonna hold it. We made a bunch from it, and so we're just gonna keep holding it. But yeah, with Disney we're up as well. Our average for Disney is about a 111, 111.70. We're up about $1 a share on Disney, so that's nice. You know, a little bit less than 1% gain on that swing trade, which is fine. Tesla up to 284.90s here. So Tesla making some moves. Let's see if it drags the SPY up here. Here's the SPY, and then Apple had a huge rip up. SPY at 398.50s. Will the market break 400 today? I think is the question. Like, is the market going to break 400 today, guys? And I'm still in a little piece of Disney, but we're up nicely today already. Just to give you a list of what we're currently holding, Neo. We're still holding Neo. I haven't even looked at Neo today. How's Neo treating me? Okay, we're down slightly on Neo today, but that's all good. Again, I like Neo long term. Neo's delivering 30 to 33,000 vehicles potentially in the third quarter of this year, so they're still putting some numbers out for Neo. So we're holding a piece of this too. So we are holding AMC, Aapl, Bed Bath, Disney, DraftKings, GameStop, NASDAQ, and Neo. Might cover my NDAQ trade. We're actually green on NASDAQ. So I guess we could keep holding it. So we actually bought NDAQ, a couple days ago, and we're nicely green in it. Our entry is 60.7, so our entry is right around here. So yesterday's action kind of helped us there. But we'll let it ride, DraftKings, we're still in DraftKings also. DraftKings did really well also. So if you guys remember, we called out our DraftKings dip. Our entry for this one is 1576. just to give you guys kind of where we're entering these things. 1576. So we entered this one right here. Right here is where we entered that one. The arrow is the easiest way to judge this. So yeah, we entered about right here. And so we're up nicely on DraftKings too. Yeah, Neo seems like a good deal right now, between 15 and 25. Oh, my wife saw a Lucid. My wife did see a Lucid. Y'all want to see the pictures? Honestly, they're really pretty, bro. Seeing one in person, my wife took a picture of it. They're pretty cars, bro. Y'all want to see it? When was the last time JP spoke and the market reacted positively? The last FOMC meeting. The last FOMC meeting, Jerome Powell spoke, and the market flew. Let me see when the last FOMC meeting was. But yeah, the last FOMC meeting, JP spoke and market flew up. Hey, my man Jose, thank you, brother. Thanks for showing the learning every day. Can you check out Ruby? Short interest, please. Yeah, I got you, bro. Hey, but yeah, thank you so much for that $10, bro. I really appreciate it. Let's check out Ruby. Ruby, I'm showing anywhere between 4 and 11% short float. Showing anywhere between 45 and 85 million in the float. Roughly 90.36 million outstanding shares universally on the platform. So yeah, so about 45 to 85 million float, about 4 to 11% short float, and about 90 million outstanding shares for Ruby here. We can take a look at it a little bit closer if you guys want. But yeah, thank you so much for that. $97 for Ruby. We're at 97, right around the 200 moving average here. So short term, let's see if we can bounce at the 200 moving average. It looks like a reasonable, bounce area. So yeah, doesn't look bad, bro. Not really my wheelhouse, so to speak. Certainly not saying it's going to go up. I have no idea. But yeah, certainly appreciate it. Thank you. What's the expectational numbers for jobless claims? So expectations for initial claims is coming in at 235,000 expectation. Continuing claims, they don't have expectational numbers, but last was 1.44 million. Yeah, but this time things are worse. Saw about 1.5 trillion margin energy, Bloomberg. Hey, what's up, Alan? Y'all do me a favor, hit that like button, guys. Let's run the like numbers up here. We got about 47 likes. We can hit 100 real quick. We got about 203 people here already at 7 a.m. in the morning. So, hey, hit that subscribe button if you have not already. We certainly appreciate it. Hit the like button as well. We got about 170 votes here about what the market's going to react, how the market's going to react to the Jay Powell speech. 61% think the market's not going to react well. 39% think it is. Again, the last FOMC meeting, because we started to talk about that, was in July. So the last FOMC was July. Last Fed minutes was released on the 17th of August. And so, yeah, you can see if we look at July here and then look again, July 27th, I believe is when it was. If we look at a one-day chart, let's look back at July 27th. So the last FOMC meeting was right here. Okay. So this was the last FOMC meeting, and the market reacted very positively to the rate hike decision and Jerome Powell's press conference. So, sometimes the market does react positively. It depends. Like, one of the reasons, okay, just to give you kind of some more nuance behind what's going on Fed-wise over the last couple months. All right. So during this meeting, I'm trying to remember, they raised rates less than expected. Or no, I think they raised rates 75 basis points again, and they said some optimistic things during that press conference. So really, I think they raised rates 75 basis points, but then they said some optimistic things. Essentially that, one of my theories before this was that gas prices was cheaper on my end already. I was looking around, gas prices had gone down some. And so my conclusion, seeing those gas prices coming down, was that we might get a, favorable response by the Fed. And sure enough, the Fed said that inflationary pressures were easing, I believe is what they said. GameStop dipping down to 26 here, guys. Let's see if we bounce at 26. We're dipping down there now. Under 26, had a big red candle show up here on GameStop. Big red candle at 25.70s. But yeah, so essentially they said during this Fed meeting that they thought inflationary problems were easing, that we still had to be aggressive, but they saw them getting better. And so, if sure enough, the market just ripped up from that. You can look here on the 27th all the way up to mid-August. The market basically had this huge bull run. Only had 1, 2, 3, 4, 5 red days out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. Out of 16 days, we only had 5 red days during that period, and a really nice bull trend moving forward. And then we had the Jackson Hole Symposium here. And Jerome Powell, I guess, thought that we were a little bit overbought from that and that the market had reacted too positively to that. And so he kind of lowered expectations some. He said that we still had to be very aggressive in terms of rate raising. He still said that we had a lot of inflationary problems. And so sure enough, once we had that Jackson Hole, Jay Powell speech, look at this big red candle. This is from when it was. Market just dumped. Market just fell. And so now leading up to this, which is Jay Powell speaking again, the market has already corrected some. I mean, sure enough, we flew yesterday. The market had some really positive reactions. And so on the short term, look at Tesla breaking highs again at 285.20s. So on the short term, we could have an argument for being in overbought bull trap territory, considering the massive bull day that we had yesterday in the markets. But at the same time, though, on a longer scale, on a longer basis, there could be some oversold arguments that we have been dropping pretty consistently over the last 20 days or so. And so maybe it's time for a bounce back, even with the big rip yesterday. Ultimately, it's going to depend on, jobless claims numbers are important, but it's really going to depend on what Jay Powell says. And again, let me know if you think he's going to say good or bad things, some big nuance behind that. Hey, what's up, Eric? Gas prices and positive talk that have been happening is only going to last until, maybe, certainly historically that's been somewhat true, I think. And it's not just one side. It happens on both sides. Like, they just want to see the market do well because of elections and stuff like that. All right, guys, SPY up to 398.50s here, 398.50s. All right, guys, Tesla up to 285.19s here, 298. Market pulling back a little bit. We might buy the dip leading into this, so we might buy the dip in the SPY leading into this. Let me know what you guys think. We can buy the dip. Buy the bid, sell the ask, time and force. We're going to get rid of flatten, reverse, cancel. Put this up here. We got TIF in there. Okay, so that should be enough to buy the dip. All right, so we're going to go ahead and buy this dip. We're going to join the bid, though, see if we can get a better fill. See if we can get fill right around here if it lets us. Nothing yet. We can buy the ask price. Okay, that's reasonable. All right, we're going to get in with 25 shares on this dip on the spot. 25 shares. We'll see how the market reacts. I don't mind adding into this dip on a small time basis. Wait, where did my thing go? Oh, there it is. Okay, cool. Yeah. All right, so again, we'll see how the market reacts. There's Tesla at 285s. GameStop's just dipping heavily here. It's had 1, 2, 3, 4, 5, 6, 7, 8 red candles in a row for GameStop. Let's look on Twitter to see if anything's been posted. Yeah, nothing really recent for GameStop. So again, are you buying this dip? Let me know. Here's the SPY dipping too. So we could be following the market to a certain extent. I don't think GameStop follows it heavy, but we could be following it some. ASAN had good earnings. Correct, Rain. That's basically the logic. It's never 100%. Just to comment on what Rain said here. Very true. So he said, so we want jobless claims to come in higher for inflation to come down. Is that correct? Basically. And the reason for that is because the more people that are working, it might sound counterintuitive or counter, logic, but the more people that are working, the more disposable income and spending that's out there, and in turn, higher inflation, right? The less people that are working, the less income, the less disposable income that is out there. And so in turn, lower inflation. That's the logic behind it. And that's been true for most of these lately, is that we actually want to have less. We want to have more unemployment, if that makes sense. in terms of just reactionary things with this. We want to have less people working, because that means that inflationary problems are going to usually come down, at least some. Now maybe not. Who knows? We're going to go ahead and add about 15 shares to this SPY dip and then cut it pretty quickly if it doesn't work. All right, 40 shares right now. 40 shares. All right, guys. So Tesla up to 285s here. Again, we're in a little SPY dip. BIOX earning release look good. No, I can take a look at it. I don't really follow BIOX. I don't know much about this one. We can look at the earnings report though and see what's going down for you. Hold on one second. Let me look. I mean, they're up some. They just don't move in pre-market usually, it looks like. Fourth quarter sales beat expectations. It looks like they were positive, but it's hard to see. I'm not going to read through this whole earnings report. It looks like they were somewhat positive. Let me check another platform. And they're up some. Don't get me wrong. I mean, they are up some. So they put in fourth quarter sales of 105.75, beat the 94.89 million estimates. Fourth quarter loss of 4.7 million. Fourth quarter revenue of 104.1 million. Didn't give us EPS numbers, so hard to tell. Just not enough volume for me to really want to get behind. I don't know enough about the stock. Maybe it's good, but mostly a sideways trend long term. Just not really my style, bro. Good luck with it if you're in it. I hope you make money. But yeah, so we're in the SPY small. Yeah, what's up, Blowell? All good, Kyle. No worries, man. So yeah, so Tesla up to 285s here, 285s. Bed Bath at 780s. We got GameStop at 2560s. SPY at 398s here. And again, we do have Jay Powell today. We got Jay Powell. We have jobless claims numbers coming out. Just a lot of stuff happening. All right, guys. So market's still dipping here. I'm not going to add any more. We're going to see if it holds at 398, and if not, we're just going to cut it and kind of move on with it. GSAT. Yeah, GSAT had a deal with Apple. Here's GSAT. I wish it would have held more of these gains here. So if you look at the deal with Apple here, I wish GSAT would have held some more gains, to be honest here, because yeah, it looks okay, but yeah, so Globalstar spiked Wednesday after Apple announced a partnership with them, which is a satellite company, to provide emergency services with GSAT, which is Globalstar. They're a satellite company. They've kind of been volatile for the past couple years. Some traders and investors expected them to talk about this one last year, so a complete year ago, and just never really heard anything from it. Apple's executive, Ashley Williams, explained that, quote, now your iPhone can connect you with the help you need when you're off the grid, end quote, using GSAT. So GSAT, again, I wish it would have held some more of their gains, because it spiked, but it didn't really do anything. And for people waiting for this announcement for a year, it's probably a little bit underperforming for them, because you would expect when a company like this has this big of news that they would just fly. The problem, though, is that when you got this many bag holders in a position, when you got this many people that are stuck in a position, if everybody thought this was happening last year, when you got this many people stuck in something, whenever they do finally make these spikes, people are starting to take profit. People are unloading. They're not holding that. They're saying, oh, it's finally up. Let's get out. And that's kind of essentially what happened. So it popped up to 3 and people just unloaded shares. And now it's back at 2s. So, the problem is it just didn't do much from it. Didn't do much. Still sitting right back roughly where it was before. If we're looking at it objectively, AMC at 830s right now. GameStop dipping. Apple at 156, right around that previous closing price here. Tesla at 284.90s, almost 285s. Yeah, so Peloton, man. I don't know, bro. Peloton's had a pretty rough few months, dude. And so Peloton might be just oversold now. Look at Peloton. It's all the way down at under $9 a share. If you look at Peloton over the last year, this is one of the worst looking charts I've ever seen in Peloton. I'm not going to say I told you guys, but you guys know. Peloton at 118s, 890s now. So from 118.60 at the top of the year to 897. So sub $10, single digits, and just not looking good for them. Again, I don't know what they're gonna do. Who knows? But again, my problem with this is that it's too gimmicky. It's kind of like a Bowflex, and I've said this a million times. I've said this for the last few years, really, about Peloton. Every time somebody's talked to me about Peloton, I've told them, I said, look, the problem here is that most people that are actual gym enthusiasts, there are a few things, right? People that are really about it like that, they're just going to buy themselves a nice mountain bike and they're going to go ride themselves, or a nice bike and they're going to ride themselves. You're solving a problem that's not there for Peloton. People, yeah, it gets hot, but that's part of working out, sweating, releasing those endorphins. That's part of working out, so people are, instead of spending, here's the issue. The virtual reality bike is more expensive than the actual bike. Okay, that is the problem with Peloton. You're asking people to pay thousands of dollars for a virtual reality bike that they can go buy a real bike, a nice bike, for less. People can just ride their bike outside. They don't need a virtual reality bicycle. And so with that, very little need for a Peloton. And in turn, the stock is reacting like it. If you look at a long-term chart, tough chart. And again, for me, it's gimmicky. Never really been about Peloton. Never liked it. Always thought it was vulnerable. Hey, what's up, Daniel? The solar panel companies are going to run. Hey, we'll see. The jobless claims reports are released at 8:30 in about an hour. Jerome Powell speaking at 9:10. All right, guys. GameStop popping back up, almost up to 26 here. Trying to get back over VWAP. Let's see if it does. SPY's still bouncing up a little bit. I told myself I wasn't going to add, but I do have a little bit of a temptation to add 10 shares to this, just to give it an even 50 so I can scale out reasonably, and I think I will. I lied. I'm going to take 10 more. We got 50 shares now. Just so I can do 25 shares in increments in this account, so I'm using 25. So we're in 50 shares of the SPY. Not necessarily a small position, but it is a short-term position, and we'll see. Yeah, BBBY, the fund starts at 8. Hey, we'll see, bro. We're at 790s now. We're testing the previous closing price for Bed Bath & Beyond here. So, yeah, we'll see. We'll see what happens with this one. Today, the big news is JP. We got JP speaking at 9:10. All right, we're going to do a poll regarding all of this Peloton talk. We're going to do a poll. Would you rather have a Peloton VR bicycle or an actual bicycle? All right, vote in the poll. We're gonna make this 3-day long poll. All right, guys, vote in the poll here. Vote in the poll. Would you rather have a Peloton VR bicycle or an actual bicycle? Vote in the poll. Peloton or actual bicycle? 3-day long poll. Vote in the poll right now. Where are your charts? My charts are right here. Right in front of you, bro. Look, here's one, here's one, here's one. Hey, what's up, Chris? Good morning, good morning. Vote on the Powell speech as well. We got the Jay Powell speech coming out today. Jobless claims numbers drop at 8:30. We got Jay Powell speaking at 9:10. Bed Bath & Beyond up to 790s, trying to break over 8s. We got GameStop bouncing right around 25.50, $half area. We're going to see if that holds. It's trying. Is that 25.50s? You want to vote? Vote on Twitter. You guys, vote on Twitter. That's where the poll is. Would you rather have a PTON bicycle or an actual bicycle? Vote on the poll right now. We got 1 vote so far. 100% say actual bicycle. Let your voice be heard here, team. But that's my argument against it. I mean, listen. I'm not saying there's not a market for it. What I am saying, though, is that the market's small. The amount of people that can, number one, afford a PTON, that have the disposable income to afford a $1,500 virtual reality bicycle, that aren't going to choose to just go with a regular bicycle, and that are going to, be willing to shell it out. I think that's a small market, and somebody hit me with some numbers, because I'm sure somebody's going to be like, nah, John, they produced X amount last year. And I get it. They did. I think they sold a lot, but I think that gimmick is going to fade. All right, guys. So SPY's still dipping. Again, we're in 25 shares. We'll cut it fast. Previous closing price right underneath us. That's the only reason we're still in it. Peloton up to 905 today, so maybe it's proving me wrong here. Bed Bath testing 790s. We do have Tesla on the run today up to 285s right now, so Tesla's moving. Apple with a crazy day yesterday, just a huge day. It's up to 156 right now, 156 for Apple, so just a huge day for Apple. Just huge moves, huge volatility for this one. And honestly, to be honest, let me retract my previous statement. Apple didn't really run that much. So I guess people were expecting more out of the Far Out conference. I almost streamed it. But Apple reveals a new iPhone with satellite connectivity at Far Out event. Do you think that justifies a bigger move up? Or do you think people's expectations are going to be kind of worse? Or do you think people had better expectations here for Apple? Let me know. GameStop bouncing back up. We got the SPY moving back up as well at 398s. We got Apple right around 156s here. Bed Bath is making that pop. It's up to 795s right now. 795s here. So we are now technically green on the day for Bed Bath & Beyond. We are right under $8, and the previous closing price is at $791. VWAP is at like $794, $793. Hey, my man Ali, thank you for becoming a member. I definitely appreciate it. Yeah. Apple still feels there's work to do before the headset release. I think there's a lot more wanting info in their metaverse and their headset. Yeah, 100%. I think a lot of people expected that. I'd rather eat a whole pizza. Hey, me too. I can't eat pizza anymore, bro. I went to Chuck E. Cheese the other day, bro, and it just, I had to do it. Chuck E. Cheese pizza has never been that impressive. Everybody knows. If you got kids, you definitely know. But I still miss the pizza. I can't really eat it, Ooh, man, somebody's using my content. Oh, dude, somebody is using my content, bro. Scammers, bro. Scammers, dude. Oh, yeah, this is my content, 100%. I think they're using my content. This isn't even Binance, bro. Let me see. I think they cut out all the pictures. I have to figure what video this is, man. So YouTube just gave me a notification. Somebody's stealing my content. Ooh, man. Should I report them? I guess I should, huh? PTO and bikes are too expensive. Yeah, it was a fad during harsh winter months. I can see why one might want one. Yeah, but I don't know if that's still going to justify the movement here. All right, we're going to go ahead and cut this little baby trade. Take our little $25 L here and refocus. Fed speech is at 9:10 a.m. 9:10 a.m. Yeah, bro, this guy's stealing my content, man. Just stealing my content. I can see him. Trying to pump some sleazy Binance trading bot. I'm not even trading on Binance in the video, bro. I can't even use Binance, which is why you know it's sleazy. All right, let's report this guy. Yeah, what's crazy, it was a video that Mitch did back in 2020 on this channel, you know. So yeah, we got to go ahead and strike this man. All right, guys. So yeah, we got to put in a request to remove it. All right, so SPY pulling back down to that 397.70 level here, right around the VWAP, right around the previous closing price. And so if we have a bounce level, I think it's here for the SPY. Yeah, I think if we're gonna bounce, I think this is it. Yeah. Yeah, you're probably right, Adele. Yeah, let me go ahead and do that. All right, guys. So SPY at 397.80s. Yeah, I wouldn't usually complain about this guy, but he's scamming people, you know? So it's like he's sending people It's 100% a scam. Like he's sending people, he's trying to get people to click a link, and his YouTube channel has 0 subscribers. Let me make sure real quick. Let me mute this. I'm gonna mute the screen audio, and I'm gonna look at it to see exactly what's going down in it. Hold on one second. Yeah, I don't even think he adds anything to it. Yeah, he completely there's literally nothing unique about it. He just stole the video. So good. So the request is good. You know. All right, guys. Remember, we got Jay Powell today. We got jobless claims numbers getting released in a little bit less than an hour. Those numbers will be interesting. We got GameStop at 2560s. We've got Apple dipping down heavily here. So, let's see what happens moving forward with everything else. But market's kind of dropping a little bit now. Bed Bath dropping some too. And yeah, team. Again, bullish or bearish today. Vote on the poll right now. We got a few polls going on. So regardless of what your pick is on these polls, we got a few things going on. We're also looking at the dollar cost here. So here's the dollar. Dollar has been dropping pretty much all morning, which is good. We want to see this drop. Here is when the day started right here, September 8th. So this is when the day started. So, dollar started out at about 109.70s. We are at 109.43s, 42s right now. So that's great. We want to see the dollar drop. Again, when the dollar loses value, that's good for equities. I'm not sure why Apple and everything else is tanking as far as it is right now. Let me know if you guys know. Looking at the broader news here, but yeah, so I guess people are upset with Apple that they didn't have enough stuff to debut during this meeting here. Again, people said that they lacked surprising iPhone features, so they didn't really surprise us with anything new or super interesting. People are not really happy with the Apple conference, is what I'm showing here. Even though mostly markets ripped up from that, we do have Jay Powell speaking today, guys. So we do have JP speaking today. All right, guys. So yeah, Jay Powell today. Seen a few comments now. Let me catch back up. Yeah. Yeah, I love Androids. Androids are just better phones, bro. They're just better phones, dude. Um, they're just better phones. They're better for like I'll put it this way. Here's the reality of it, right? Like iPhone, at least historically, iPhones have been the better UI. Better UI. Capability wise, Androids are far on top. Androids are also the more widely used phone. Like you might look at Apple and say, hey, everybody's got an Apple, but that's in the United States. Worldwide, Android is far more used than Apple is. Not far more used, but it's definitely more used. At least the last time I checked the graph, it was. And so there's a thing to understand. Apple is good, but one of the reasons Apple is so successful as a company is another reason that their phones are less. They have less capabilities, because they're too locked. They're not as free as Android phones. You can't do as many things on them. Great UI on Apple, and that's usually what kind of saves them. Is their UI is amazing. And so if you're like if you're my parents or my father-in-law or my mother-in-law or somebody that's a little bit older that just wants a simple phone to use, Apple's great. Apple's great. But if you want big capabilities in terms of like, you know, uh, if you want big capabilities, Android's probably the better one, uh, at least in my opinion. But again, it's a subjective thing, of course. And so yeah, JP today, man, Jerome Powell. Um, a user interface is what it stands for. App on Apple, it's just better. Not the graphics, but the way users interact with it is better. Like it's more connected to each other. I use AirPods still because they're just better headphones. But in terms of capabilities, I think the state of monetary policy after 40 years is kind of what's going down here. All right, guys. All right, guys. Yeah, so 9:10 a.m. Jerome Powell speaking. We'll see. SPY up to 398. So SPY bouncing back a little bit. Again, I told you guys if we were at a bounce level, it was there. Uh, Apple has a better camera. Yeah, 100%. No, not even an argument there. But Android's getting better. Well, GameStop's just kind of consolidating after that big news release here. So GameStop's just correcting stuff. Most of the time after big news, they don't most things don't actually hold. So what you want to see is you want to see a big move up, and then you want to see a small, reasonably sized pullback, and you want to see it hold and then bounce back, right? So the pullback is a little bit larger than I would have preferred. We're now under 26, which is what I wanted to see it hold, but we're at 25.50s now, and yeah, well, we'll see what we get. All right, guys. Bed Bath still at 780s. Apple just dipping down. Tesla has been flying up today too. So here's Tesla. Tesla pulling right back to the VWAP now. So let's see if we bounce here. Hey, what's up, Liana? Good morning. Good morning. I actually tested 56K dial up a couple years ago just for the experience. It was slow. Yeah. Honestly, it's been a while. I remember that's what I grew up on. Like one of the reasons that I love tech nowadays is because I grew up on it. It's one of the reasons I try to get my kids in tech as much as I can. Um, is because I grew up with it. I grew up with tech. I remember being a kid and using. Um, I remember being a kid and learning how to use a computer and signing in with dial up and going to like America Online. And it would be like, welcome, and using it. And you go to the chat rooms and all that stuff. It was an interesting world for a kid to learn the internet on, and then you kind of grew up as it slowly progressed and got better and better. When I first started using the computer, it was dial up. And so, very slow, very slow. Just to put this into perspective, to switch pages on a dial-up modem or on a dial-up internet, to just go to a new page would take a solid 15 seconds. 15 to 20 seconds. If you have good speed, if you had bad speed for that entire page to load, it might take 30 seconds, right? So you had to go slow. You had to click a page, wait for the page to load 30 seconds later, click another page, wait for the page. And that was if you had good internet. If you had bad internet, I remember my dad did not have good internet, bro. For whatever reason, my dial-up just did not work well at his house. I remember for him, it would take me like a solid minute and a half, just to get anything to load. It would take so long. Oh, y'all can't hear the music. My bad, guys. I'm playing music. I just muted it so I could check something. So there you go. Music's back up. Yeah, I had an N64. I played Zelda, Ocarina of Time. My favorite game ever. But no, then I remember when they started getting better internet. And then, slowly got better and better and better. My mom always had good internet and good computers. And so I always used to play on her stuff. My dad always kind of never had anything. But, my dad was working, so I mean, he didn't really use a computer that much. My dad used to have Flight Simulator that he used to play. All right, guys. Yeah, I remember not being able to use the phone too. Yeah, smash that like button. Hey, it's free. I would never pressure you to, but if you don't, is this joke used up? I think it's probably used up enough. I thought zip drives was gonna change the world, bro. I used to hate zip drives, bro. Yeah. All right, guys. So yeah, we are signed up for the J Powell conference. We are ready here. We are ready. All right, guys. So hey, we got J Powell speaking today. In about 40 minutes, we got jobless claims numbers coming out. In about 40 minutes, we got those numbers coming out. We'll see, guys. We'll see what we get. We did get some votes on all this data coming out. And again, let us know your voice. Let us know what you guys think. Okay. In terms of jobless claims and Jerome Powell's speech, calls or puts, we had 74% saying puts. So what I'm seeing is an overarching bear sentiment. Calls, we got 26%. So only about a quarter of people think that the market's going to react positively to the JP speech and to the jobless claims data that's coming out today. We also did a poll on YouTube. Here, we got about 330 votes, 323 votes. Well, the markets have a positive reaction to J Powell. 60% think no. So a little bit better percentages in terms of calls versus or long versus short, but 60% of people say no. The market is not going to react positively to JP's speech. Again, vote on the poll. Let me know. We also did another poll on Twitter regarding Peloton here. Another Peloton poll. Would you rather have a Peloton VR bicycle or an actual bicycle? 86% of people said the actual bicycle. Only 14% of people said Peloton. And so again, I think Peloton is one of those services that you need salesmen. I think you need salesmen. I think if you want to sell that stuff, you need to sell it. Or I think they need salesmen to sell people. And really, I'm not going to say the gullible, but I'm going to say the more easily sold people are going to buy them. And other people are going to say, hey, I could just buy an actual bicycle, for less than this, and just ride around my neighborhood. But I get it. People have different, like, I understand some people do want to stay at home and they don't want to be seen and they want to be able to work out or do stuff without being seen, and I get it. But there's ways to do that without spending thousands on a bicycle, on a VR bicycle, and so it really depends. Yeah, ASAN with a big move up yesterday on those. ASAN with a big move up on favorable earnings for ASAN. Just great earnings. Huge rip up. Hey, what's up, Diogo? Hey, thanks, man. Yeah. Hey, Ali, you say, John, great call on Gamestop yesterday. Made some money. Thanks on that. In the stream. Hey, always happy to help, bro. Thank you for the support, bro. Nah, I was more of an AOL guy, bro. I had America Online. That was my niche. I used to go on there and do the whole go into the chat rooms and be like, hey, 12M Louisiana. What's up, guys? And I had an online girlfriend. It was really some dude named Bubba, probably. That's like 50 years old. Now that I've seen back. Now that I've seen To Catch a Predator, that's probably who it was. In all honesty. But I remember dial-up internet. Yeah, I was more of a Need for Speed. I had Need for Speed, the first one. I had World of War, or no, I didn't. I had Warcraft. It wasn't World of Warcraft. It was before World of Warcraft. I had actual Warcraft, and then I had The Sims. How do you feel the JP speech will affect us? I really don't know. I think that last time he spoke, it tanked the markets. And I know he wants to lead in with expectations, but I'm hoping he says some positive things. The last time he spoke, the market tanked. And so the last time he had a very bearish sentiment, I'm hoping he's balancing it out and he's going to say something positive so the market doesn't come all the way back down. That's what I'm hoping. But again, you never really know. Oh, I had Duke as well, Ace. I did have Duke. Hey, what's up, Jason? Hey, what's up, Manny? StarCraft era. Honestly, The Sims was cool, bro, because let me tell you this. My first online game, the game that got me addicted to online games, was The Sims Online, bro. The Sims Online was beautiful. One of the reasons I think that I'm like business minded, or I like to, I like to start businesses and stuff, is because The Sims Online had a beautiful idea, bro. It had like its own world of like thousands of people, and you could start your own businesses. Like I had a casino in The Sims Online, and you could change the odds of your slot machines. So you could change the odds of your slot machines. You could do competitions and have all these random people show up. It was just a cool idea for The Sims. They ended up getting rid of The Sims Online. My guess is it wasn't making enough money. This was really before anything big. They should redo that idea, really, because that was fun. But I had my own casino in The Sims, and like I was making money, and then they got rid of it, and I was super upset. This was when I was like 11, I would say. And so I gotta credit that to a little bit of why I'm more entrepreneurial, I think. Yeah, I guess that's true. Command and Conquer. I see ads for Command and Conquer. Anyways, we're gonna go back to stocks. We're talking a little bit too much about it. Apple at 155.40s, and this is my fault. Tesla at 284.20s. We got GameStop at 25.50s. Bed Bath still trying to make a move here. Apple has fallen down a lot over the past couple days, though. So Apple has dropped sizably over the past couple days. We're in Disney and DraftKings. Again, DraftKings we're in at 15.70s. Disney we're in at 111.70s. Bed Bath & Beyond is starting to move back up. Apple is down, so is it time to buy this Apple dip? Do you think we're going to bounce back from this? Again, the jobless claims numbers are coming out in about 35 minutes. So in about 35 minutes, the jobless claims numbers are dropping. And then about 40 minutes after that, we have JP speaking. And so we got a lot of stuff happening. Yeah, so Apple's starting to move up. Let's see if we get a bounce here for Apple. Tesla been really strong. Let's see if it bounces at VWAP at 284. I played Castle of Wolfenstein, the online Xbox game, but that was the only one. Never played any of the other ones. Oh, bro, you got us all beat Hertz. I remember the first AM transistor radio, and then we got FM. Hey, bro, you got us all beat, dude. Yeah, so jobless claims and unemployment data at 8:30. So hopefully we get some favorable positive reactions here. I'm hoping that we do. We'll see. Again, about 35 minutes. Guys, 35 minutes. And again, vote on the poll right now. We got about 350 votes. 58% are saying no. We're not going to react positively to JP. Again, I'm cautiously optimistic. I hope he says positive things. Wait. What? Yeah, rest in peace to David Arnold. That's sad, man. Yeah, guys. So everything rebounded yesterday. Again, the SPY bounced all the way back up to almost 400. We're right now on the SPY. We are, at least before this Aapl dip, we were close to 398s, right about 397.50s right now. And so, you know, we'll see. The dollar is steady dropping today, which is good. You want to see the dollar drop. You don't want to see this move up. Again, dollar's been dropping nicely, especially over the past couple minutes here. Let me see if I can get a better chart for this. There we go. Yeah, so the dollar is dropping nicely over the past couple minutes. We'll see if it continues. I'm hoping it does. I don't know what time this is, but yeah, we're starting to drop. We're at 109.30s, 109.40s here. So hopefully the market rallies on this. Usually when the dollar drops, the market rips up. And so right now, SPY is consolidating. I guess we should say consolidating. Here's the SPY right here. SPY is right around the VWAP, right around the previous closing price, right around, some support levels here. So kind of a make it or break it level. Very neutral day right now on the SPY. So very neutral morning so far. Nothing too crazy. Yeah, bro. I used to watch Sonic on Saturday morning, bro. I used to eat oatmeal and watch Sonic in the morning on Saturdays. I still remember that. I feel like I watched like Captain Planet too or something else. Sonic, Captain Planet, Ninja Turtles. Yeah, so SPY at 397.70s. Let's see if it gets back over 400 today. I guess that's the question is, do you think we get 400 today? If the market gives us something, hopefully we can. GameStop bouncing back up to 25.50s here. So a little bit of a green move for GameStop over the past minute. We got about 15,000 shares traded, 14,000 shares traded or so. I remember the game Sailor Moon. I never watched Sailor Moon, but I remember the game where you could like do the crops and build the story. I remember that. GameStop at 25.50s right now, though. Let's see if we run up. Yeah, where in the world is Carmen Sandiego? I remember that too. Disney at 112.70s. Again, what's your favorite stock today, guys? Again, are you buying up stuff? Here's the question. All right, here's the real question. All right, if the market drops today on Jerome Powell's comments, are you buying the dip? I guess is the question. Are you buying the dip if the market does drop today? Are you buying it up? Or are you going to wait and see what happens with CPI next week? See what happens with the FOMC meeting after that? Let me know. You know, because I think that's the big thing is, you know, are you buying up dips? Yeah, I like Dragon Ball Z too. I like Pokemon really was my show though. Pokemon, I grew up right in I grew up in the 90s as a kid. And so that was right in the heat of Pokemon, like, right at the peak of Pokemon, like when it first came out, when it first started. That's when I grew up. I had all the holographic. I mean, if I would have kept all the cards I had as a kid, I would be rich. I had a bunch of Charizards. I had the Japanese Charizard as well. I just had a bunch of cards, bro. They were, now that I think about them, half of them are probably just beat up, though. You know, SPY at 397.80s. So let's see. So let's see if people are buying the dip in increments today, slow and steady. Just be careful. Remember, we got CPI coming out next week, right? So I usually am a little bit more apprehensive to take any sizable positions leading up to these big fundamental releases like CPI on Tuesday. CPI comes out Tuesday, and then the Wednesday after that. Then the Wednesday after that we get the rate hike decision, the Fed rate hike decision. So just be careful. You know, we got some volatile times over the next couple weeks in the market. Should be fun for the stream, big for the channel. But yeah, we'll see. Again, guys, we got about 29 minutes before jobless claims fundamental data comes out. Yeah, so we got unemployment data, jobless claims numbers. And again, the common logic right now, SPY back over VWAP, SPY back over previous closing price. The common logic here is that if we have lower than expected job numbers, if we have higher than expected unemployment, higher than expected jobless claims numbers, that should make the market go up. Again, it should make the market react positively, have a bullish reaction to less jobs, because that means that inflation might go down. And that's what everybody is judging now. In a time of heavy inflation like we are now, people want to see people working less, believe it or not, because that means that inflation might go down. And so, again, that's the common logic here. So if we get in higher than expected jobless claims numbers, the market will probably react positively. The market will probably move up. And again, that's kind of what if you want the market to go up, that's kind of what you want to see. You know, you want to see higher than expected jobless claims numbers. Again, for expectations here, let me get this ready. Hold on. So I gotta exit out of a bunch of stuff. Got way too many screens up here. But yeah, so expectational numbers for these for this job report is going to be, so they're expecting, this is for the September 3rd jobless claims week. They're expecting 235,000. Last time it was 232,000. Continuing claims. Last was 1.44 million as of August 22nd or 27th. Jerome Powell speaking at 9:10 a.m. So we're going to have that as well. Gamestop starting to move back up. Let's see if the market just holds here at the VWAP here. Bed Bath dipping down some more. Disney dropping a little bit. So all right, guys, so GameStop's starting to move back up here. Apple at 155.60s. Bed Bath at 774s. On the daily for Apple, would you call that an inverse head and shoulders? Let's take a look. Put Tesla up here as well. Tesla at 284.30s. Inverse head and shoulders. Do you mean head here? Shoulders here? Is that what you mean? I don't know. Or you mean a little bit shorter time frame? I don't know. We need to possibly get an upward move. I can see we might have an upward move. But again, what you got to understand, I think, what this chart is really showing us, regardless of any trend here, is that this is sideways. Like, so this is sideways. Like, whenever you got the VWAP, whenever you got the 200 moving average just chopping through something, we are very neutral. Here is where we were at the start of the year. So this is just a neutral chart, a neutral trend. So I think that's how you really have to look at it. So we could go up, down, or sideways. There's not really any telling. But right now, it looks like a neutral trend to me, long term is what I mean by that. So long term, it looks neutral. So the ETH merge. So somebody say, what is the ETH merge? So the ETH merge, and this is going to affect chip stocks. So if you want to know, like NVIDIA, Intel, AMD, MU, other microchip stocks, what's going to ultimately affect them is this ETH merge that's coming out. So this ETH merge, essentially right now, there's two types of cryptocurrencies that are well known. Blockchain, So there's two types of cryptocurrencies. There's proof of work, which means it's mineable, which means it's a mineable cryptocurrency. Bitcoin, proof of work, which means you can mine Bitcoin. ETH currently is proof of work, but what they're doing is they're switching it over to proof of stake, which is instead of tracking the history through where it was mined with proof of work, they're tracking the history of where it was staked. And with that, it's going to make essentially a lot of miners lose that part of their business, right? If they are mining ETH currently, a lot of them are already switched over, but if they're mining ETH currently, a lot of them are going to lose business because they're no longer going to be able to mine ETH once the merge goes through. And so that is what the ETH merge is. It means they're transitioning it from a mineable cryptocurrency over to a proof of stake cryptocurrency, which means that miners are not going to be able to use it anymore. A lot of them are probably going to flood the market with expensive miners, which have, graphics cards and all that stuff in them. And that's probably, at least it's speculated that it's going to lower the price of chips. It's going to lower the price of those miners because they're no longer going to be able to mine ETH, which is a huge percentage of their mineable cryptocurrency as a whole, of their business. And so again, leading up to this ETH merge, you can see like Mara, Riot, they've all done pretty poorly. Aside from just doing really bad on Bitcoin's, weakness, there's a big question mark there for the miners. And the merge is supposed to go through this month, sometime this month. It's supposed to go through. You can go to Win Merge to check, but it's supposed to go through sometime this month. Yeah, all good, Carrie. No worries. Y'all hit that subscribe button if you haven't already, if you could take the time. Riot only mines Bitcoin. Okay, yeah, I don't really know too much about any of these miners per se. I'm just saying, generally speaking, it's plausible to assume that a lot of the miners that are mining Bitcoin, or a lot of them are going to already have been transferred over to Bitcoin because they want to kind of immune themselves from that, if it makes sense. But a lot of them have bought really expensive miners, and they can continue to mine Bitcoin. But I think ETH is the more interesting cryptocurrency. I think it has the most. I think ETH has the most potential in terms of like utility. I think ETH is probably the better one. I mean, they're different things. They solve different problems. Bitcoin is online gold. ETH is like an app store that basically automatically does transactions through algorithms. And a lot of other cryptocurrencies are pegged to ETH because they use ETH's chain. Speech is at 9:10 a.m. 9:10 a.m. is when the speech hits. All right, so here's Apple. Apple at 155s. Again, SPY at 398s over the VWAP, over the previous closing price. So that's a good short-term sign for it. The data, so jobless claims numbers, unemployment data is set to be released in about 20 minutes, 21 minutes to be exact, for jobless claims numbers. And then we're going to pivot over to the Jerome Powell speech at 9:10. We're going to see how the market reacts to that as well. And hopefully we'll have some fun times today. Hopefully we'll have some interesting stuff go on. But again, jobless claims data is set to be released in about 20 minutes. So we're going to be covering that here as well. Market popping up a little bit as well. Man, I've been drinking coffee again for the last few days. Hey, thank you, Gary. Yeah, y'all give me a follow at Beginner Trades on Twitter. At Beginner Trades. Certainly appreciate the love and support. All right, SPY popping up a little bit short term here. So leading up to this data release, SPY up to 398.10s. And it's not the biggest of data releases, but it's important. It'll impact the markets, especially when you add it to the Jay Powell speech coming out today. It's kind of big news, man. It's big news. We'll see what we get. Again, vote on the polls. Let me know. On YouTube, we have a poll here that's asking, will the markets react positively to the Jay Powell speech? 58% of you say no, it is not. 42% of you think yes, it will. Let us know your argument. Again, I'm not saying we're going to react positively, but I think there's a chance we do, and I'm going to remain cautiously optimistic. I could be, maybe the market tanks. I think that's certainly an option. I think that's certainly a high probability. I would say, dare I say, maybe a higher probability. But I don't think that it's just a sure thing that the market's going to tank. I think that a lot of the time, what I've noticed from these speeches is that they try to balance things. And so they don't always just say negative things. It's not always negative, so they do try to balance it, at least from what I've seen. And so I'm hoping they do that here. The last time JP spoke, the market tanked. He said some pretty rough outlook things during the Jackson Hole Symposium meeting. And so with that, I'm hoping he says some positive things in this regard. I'm hoping he says some positive things. I hope he gives us some good expectational numbers. I have seen inflation drop on my end, and so who knows? We'll see what we get. It's at 910. So the reason that's relevant is because Lee, so Zing Lee, the reason it's relevant here is because right now we're in a time of high inflation. Historically, economic wise, we're in a time of high inflation. And so with that, these job numbers are important because if we come out with a lot of people that are working, if everybody's working, then that's more income, that's more money, that's more disposable income as well, that is going to drive inflation up. And so, to be honest, at least what we've seen over the past couple months with these job reports is that a less amount of jobs out there. So in this case, higher than expected jobless claims numbers should actually cause the market to go up. It should cause the market to rip. And the justification and the reasoning for that is because if the market has less workers, if the economy has less workers, there's less disposable income, and in turn businesses need to lower prices in order to allow people to buy their stuff. And so in turn, having less jobs out there actually lowers inflation, if that makes sense, right? And that's kind of the common logic that a lot of people are using here. That is how the market has reacted over the past couple months, if not the past year or so, to these fundamental releases. And so with this specific release that's coming out in about 18 minutes or so, we want to see higher than expected jobless claims numbers. That is ultimately going to be beneficial to the market short term. That's going to cause a positive short-term reaction, most likely. But you never really know, and sometimes the market doesn't make, sometimes the market is not consistent, I guess is the best way to put it. And so while we think that's going to happen, there also is a chance that we have higher than expected jobless claims and the market just tanks. The Jay Powell speech is really going to be the big mover, and we're going to be covering that, streaming that live here. You're going to be able to watch and hear all of it here as we do. And y'all hit the sub button if you haven't already. Hey, what's up, Brendan? JP is not short term. Well, it's certainly going to react the market. It's going to affect the market short term. I'm not. He's already said it's going to take a long-term, aggressive moves against inflation, and so he's already said that. That's one of the reasons the market dropped so heavily in the last Jackson Hole speech. But it's definitely going to react to the market's definitely going to react to it short term. So it's something that we're going to be paying attention to here for sure. And we'll see. All right, so the ECB rate hike is supposed to come out as well, you said? So let's take a look at that. We can look at it. All right, so 1 minute before the ECB interest rate decision. 1 minute. For the ECB decision rate or decision here. Forecast is for 1.25%. Previous was 0.5%. So we'll see how this reacts, how this impacts the market. Again, ECB should be out right now. Let's see what it shows. Let's see. Let me go ahead and look at the here. I'll get you. Let me look at this. Look this data up here. 1 second, guys. All right, so ECB deposit rate came in at 0.75 versus 0.5%. The ECB refinancing rate for September came in at 1.25 versus 1.25 expected. And so the EU ECB deposit rate came in at 0.75 versus 0.5% expected. And you can see how this is impacting the market. SPY is up to 398s. Market's reacting favorably to this. And again, here is that data here. 0.75 versus 0.5% expected. Market's reacting very favorably to this, pushing things up here. SPY up to 398.70s here. And again, we do have jobless claims numbers on our end. Yeah, so they're up 75 basis points. Says future policy rate decisions will continue to be data dependent and follow a meeting by meeting approach, according to Thinkorswim here. And so here is the ECB rate hike decision there. You can see the chat here. Market's reacting favorably to this, 75 basis points. Note on TD Ameritrade that the SPY and Q and others can be bought and sold. $24.5. What? So I can buy and sell the SPY all day? Oh, that's great, man. Because I've been having to wait until 7 a.m. So yeah, so SPY reacted positively to the ECB decision. We got 13 minutes before the actual jobless claims numbers drop as well here. Potentially, Michael. But again, we're looking at it in terms of combating inflation. And so that's kind of what the deal is on that, if that makes sense. All right, guys. SPY dipping down a little bit after this decision. All right, guys. SPY dumping down to 397.90s here. GameStop at 25.80s. SPY correcting all the way down here. Big drop. Let me see what happened here. I can check the global news that showed up. All right, so ECB staff forecast, staff economic forecast, ECB Euro area real GDP forecast for September of 22 came in at 3.1 versus a previous 2.8% for 2023. They came in at 0.9 for 2024, 1.3. All right, so marginal lending rate for September came in at 1.5 versus 1.5% expected here. All right, so here's what they say. They say that they said that today's this is a quoting here. It says, today's decision front loads the transition from a prevailing highly accommodative level of policy rates towards levels that will ensure the timely return of inflation to the ECB's 2% medium-term target. Following the raising of the deposit facility rate to above zero, the two-tier system for the remuneration of excess reserves is no longer necessary. The Governing Council therefore decided today to suspend the two-tier system by setting the multiplier to zero. In terms of guidance, the Governing Council expects to raise interest rates further to dampen demand and guard against the risk of a persistent upward shift in inflation expectations. The Governing Council will regularly reevaluate its policy path in light of incoming information and the evolving inflation outlook. In terms of asset purchases, the Governing Council will therefore continue applying flexibility and reinvesting redemptions coming due to the Pandemic Emergency Purchase Program portfolio with a view to countering risk to the transmission mechanism related to it. End quote. And this was from the ECB. Again, they did hike 75 basis points. They said future policy rate decisions will continue to be data dependent and follow a meeting by meeting approach. End quote. Again, from the ECB. Market's reacting negatively to this, down to 397s here, 397s for the market. Yeah, so getting a negative reaction. If we look at Apple, Apple's following the market as well. Tesla following the market some, not as obviously though. So yeah, what do you guys think about this? Again, we got about 10 minutes before the jobless claims numbers drop. We got about 40 minutes until we're gonna get ready for the J Powell conference here. And again, let me know what you guys think. All right, so there's Bbby. Here's PIXY. PIXY has been flying up today. This is Shift Pixie. Looking at the catalyst here. They announced they plan to spin off Shift Pixie Labs and dividends its digital security to shareholders. What's the short float of this? I'll have to look up what the short float is. Short float's only about 2%. So good news and all, but I don't know enough about the company to really say. It's ripping up though, huge rip from 1120s to 1870s. Float is only 15 million, so it's a small float stock, just going absolutely crazy. Again, we are ready for the JP conference. Yeah, so 75 basis point for the ECB. Yeah, I see that. Thoughts, prayers to the Queen. Yeah, I'm not showing 500K float. That's too small. I am showing 15 million float. The only person that has 500K is Yahoo Finance and FinBiz. Both have 15 million. Wall Street Journal has 505,000. Morningstar is 0.31 or about 300K. So it's mixed, but I could see the argument that it is actually 500K considering the range of movement today. SPY bouncing back a little bit. We got 8 minutes before the jobless claims data drops. 8 minutes, team. Hey, thank you for the follow, Mark. I appreciate you, bro. Thank you, sir. All right, SPY going back green on the day, back up to 397.80s, 397.70s here. Again, the data comes out in 8 minutes, team, 8 minutes. All right, guys, so we're going to put this up so you guys can see. Jobless claims unemployment data drops at 8:30. ECB did hike rate 75 basis points. So we got about 7 minutes before that jobless data comes out. SPY is at 398.02s here, 398.02s. Oh, man. Yeah, Pixie flying up right now at 1580. So huge move for Pixie. Yeah, drop a like, guys. Hey, we appreciate you. Thank you guys so much. We appreciate the love, of course. Y'all do me a favor, hit that subscribe button. I think today, if we push really hard, we can break 84,000 subscribers. We're at about 83.85. So we need about 150 subs. I think we can hit that today. So hit that subscribe button if you haven't already. Let's keep this channel growing. Again, if you don't know what we do here, everything we put out there is free. We cover all the major economic releases, all the big earnings reports, all the fundamental data releases, and we day trade, swing trade, and invest live every weekday morning for free right here. We don't charge for anything. We don't claim to be experts. We promote some great products sometimes that aren't our own products. So we do post affiliate links with some great companies, but we don't actually sell anything, any of our content ourselves. So we don't have any paywalls behind content. Our job here is to create a free resource and community for traders. And if you appreciate movements like that, hit the subscribe button. We got 6 minutes before the data is released here. We got Pixie ripping up to 1940s right now. 1940s, Tesla, SPY back, both over VWAP, both over the previous closing price, both technically green on the day. What's good and what's bad? Well, in this specific instance, the nuance behind it is that higher jobless claims is going to be favorable for the market short term because it's going to mean less money floating around there, which in turn means less inflation, and so what we consider is that short term, we want to see higher jobless claims numbers, higher. But again, who knows? Again, let me know what you guys think will be favorable for this. Hey, thank you, Brendan, my man. Thank you, brother. I see 513,000. Let me check Benzinga. And if you want to try out Benzinga, check out the link in the description. You can try them out completely free for 2 weeks without even needing a credit card number. So if you want to try out Benzinga, I get a lot of my news from Benzinga. Check them out. Let me check it out. So let me look at the float on Benzinga to see what they're saying. Yeah, I'm showing 300K on Benzinga as well. So the float has got to be tiny for this. So maybe that's right. I'm showing 15 million in other places. I'm only showing about 500K outstanding shares, which is tiny. I'm also showing a 260% short float for Pixie. 260%. So if that is right, that is one of the biggest short floats I have ever seen in any stock ever. And if that's right, that could cause a huge squeeze if the setup is there. If the stars align, that could cause a huge screen. Oh yeah, Ocarina of Time was it. Make sure, Handsome Dan, to hit the live button. You might be a little bit behind the stream, so make sure to hit the live button if you haven't yet. Yeah, thank you, Pawn. I appreciate you, bro. SPY dipping down under VWAP, under previous closing price. Pixie's still ramping up. And again, if this is true, if the Benzinga data is accurate, then man, this thing could go absolutely crazy. The market's not strong right now. Market is mostly neutral. Yesterday, the market was strong, but before that, we had a few days of doom and gloom. It's still, keeps it real, no sugarcoating trading over here. Yeah, that's what we do, bro. We try to be real. Pixie all the way up to $20 here. $20 for Pixie. So Pixie just broke 20. All right, guys. We got about 3 minutes. A little bit less than 3 minutes before the data comes out. We'll see what we get. Then we got Jerome Powell afterwards. We'll see what we get there as well. So we got some stuff. Speech is at 9 a.m., 10 a.m. We already registered. We're going to cover it fully live, stream it fully live here, so you'll be able to watch everything as we do. That's okay. You can watch the speech live right here, Ahmad. Right here, brother. All right, guys. So SPY dipping down a little bit pre-speech or pre-data release. Again, we got about 2 minutes before the fundamental release is here. About 2 minutes before we get the jobless claims data. And again, I think we want higher than expected numbers here. I think we want higher than expected. I think that's ultimately going to be more optimistic for inflationary pressures. And so I think, in this instance, we need higher than expected jobless claims numbers. And if we do, I think that's what it's going to give us a positive reaction in this instance. And again, let me know. Yeah, all good, bro. Yeah, I see TD showing 2.6% short float. So again, there's not a lot of data here. All right, Pixie at 20.3s. Huge rip. We got about a minute before the data is released here, guys. And stick around. We're going to report these numbers as soon as they go live. If you haven't already, hit the subscribe button, hit the notification bell. We are going to put it in sub-only mode for this release. Again, because we're trying to hit 84,000 subscribers here. So as the numbers come out, we are going to put it in sub-only mode. Again, support free trading content. Everything we do here is free. And so jobless claims numbers, Pixie flying up right now at 2120s. SPY is at 397.70s here. The report's about to go live in about 20 seconds, 25 seconds or so. Do me a favor, hit the subscribe button if you haven't already. Everything we do here is free. All right, guys, 20 seconds. I'm astonished we aren't talking about APRN this morning. Well, I mean, APRN made a big move, but it's not, number one, crazy high volume. It's still averaging less than 200,000 shares traded per minute. And it's technically red in pre-market activity, and so while you might be holding it and really, interested in it, or not. APRN, so there's 8:30, guys. So let's see what the data shows up. It's about to drop right now. Let's see what we get. Bear with me. Stay here. We're waiting for the data to come out. Watching the market. crickets so far. Not seeing anything reflect on my end in terms of jobless claims. Not seeing the market react to anything either. All right, there's the jobless claims number. So the jobless claims numbers are out. 4-week average came in at 233. All right, so the jobless claims numbers are out. Initial jobless claims came in lower than expected at 222,000 versus 240,000 expected. Continuing claims came in at 1.473 million versus 1.435 million. So mixed results here. We had lower than expected initial claims, higher than expected continuing claims. So mixed results here, mixed results. The Discord link doesn't work? Oh, it does work. Okay, good. Again, so here's the data. Here's the data. There's the 4-week average right here. We're going to get the rest of this days. But again, like I said, mixed results. Mixed results. We had initial jobless claims came in lower than expected. Continuing claims came in higher than expected. So mixed results here. There's the results right there. Market's reacting negatively to this. And so again, mixed results are a little bit, continuing claims came in at 1.473 versus 1.435 million. So a little bit higher, which is good, I think. But market's reacting negatively to this data. All right, guys, and here is the full list of jobless claims data right here. Porsche is going to IPO? That's crazy. So SPY dipping down to 397.60s, 397.60s. Again, so the market actually reacted somewhat negatively to this. Pixie is flying up, over 21s right now, so huge rips for Pixie. But again, mixed results here. We also had Macy's CFO said that they're not going to go back to the level of inventory levels per unit of sales that we had in the past. So Macy's saying some bleak things about their company here. Here's Macy's stock, down to 1750 here for Macy's. So, Macy's saying some bleak things. Basically, they're not going to go back to, I don't know if he's saying that in a positive or negative light. He says that we will not go back. Again, Macy's CEO says that, quote, we will not go back to the level of inventory levels per unit of sales that we had in the past. And so I don't know if he means like we're not going to do better than we did in the past, or we're not going to do worse. Let me know what you guys think. Market's reacting negatively now. And then we got Jerome Powell, guys. Jerome Powell coming out pretty soon. All right, guys. So market's negatively reacting to this, down to 397.20 here. 397.20. Yeah, y'all let me know what you guys think here. Market's breaking lows down to 397 here. Market just broke lows of the day. Or no, not quite lows. So the low of pre-market is going to be right around 396.80s here. So market's trying to break lows. All right, guys. All right, so there's the jobless claims numbers out. Now we got the Jerome Powell speech coming out in about 30 minutes. Powell speaks at 9:10. Hey, what's up, Cap? All right, team. What are you watching the market, guys? SPY testing the lows of pre-market here. And again, you can see the data. ECB press conference at 10 minutes. Puts. Yeah, so we got about 30 minutes before the data comes out, guys. About 30 minutes. Again, Jerome Powell going live today. That is coming out. Again, so be ready. All right, guys, market bouncing up a little bit. Still waiting here, guys. Again, we got about 9-10 before the Jay Powell speech. Hey, what's up, Raul? Hey, what's up, Cap? Red Weeks. Hey, it happens, brother. All right, guys. Again, we got about 30 minutes before the Jay Powell speech. Market is testing the pre-market lows. All right, guys. All right, so jobless claim is out. There we go. And again, hit that subscribe button. So we're going to cover the entire speech here live. ETH. DXY creeping back up. So the dollar's ramping back up here. Dollar moving back up. Again, we got about 20 minutes before the Jerome Powell speech starts, and we're going to be covering it live as we do. Y'all do me a favor, hit that subscribe button. We're really pushing to break 84,000 today if we can. So y'all hit that subscribe button, team, if you have the chance to. We certainly appreciate it. PIXY up to almost 21s. Jerome Powell speaking is starting in about 20 minutes, team. Jobless claims numbers are already out. All right, guys. Market's right around the previous low of the day. PIXY is flying up. Flying up. Big activity here. Big activity. Yeah. The big Jay Powell speech is coming out. Again, we got about 30 minutes. Hey, thank you, Sean. I appreciate you, brother. Thank you, sir. Again, Tesla at 283s. 283s. I think my candles are out, man. It's kind of a sad day. There we go. All right, guys. So Tesla down to 283s here. We got Pixie up to 2140s, 2150. SPY down to 396, breaking close to the lows of the day here. So the low of pre-market right now on the SPY is 396.81 or so. Let me see where the low of this candle was. So the low of this candle was at, 396.81. We are at 396.80. So we just broke the lows of pre-market right now. Just broke lows of pre-market ahead of JP speaking. Again, vote on the poll right now. You can see the poll here as we always say. We have 600 plus votes. Will the market have a positive reaction to the Jay Powell speech? 56% think no, the market will not react positively. 44% think yes, the market will. So again, we'll see what we get. I'm using Thinkorswim camping. DXY going back up. Yeah, so the dollar is rising. PIXY stock is flying up here. So PIXY stock is making a huge move. Again, it's speculated that the float of PX or PIXY is only like 500 to 300,000. It looks in some platforms. I'm showing the short float coming in at just ridiculous numbers at like 200+%. And again, let me know what you guys are showing up on y'all's end. Again, we are going to put it in sub-only mode for now. Or we're going to take it off of sub-only mode for now. And, there we go. So we're out of sub-only mode for now. All right, guys, market under lows here at 396.70s. PIXY still flying up. Pixie just did a reverse split, so maybe the flow wasn't updated. It's certainly possible. If they did a reverse split, yeah, that might be true. Claims are already out, Ali. So the claims are right here at the bottom. You can see the screen right here. So here's the jobless claims numbers. Just to weatherman this real quick. Initial claims came in at 226 or 222,000 versus 240K expected, previous of 232. Yeah, sorry. It looks like we gotta fix this banner a little bit just so you guys can see. I think. There we go. All right, there we go. We missed a parentheses. So yeah, there's the number. So again, U.S. continuing claims came in at 1.473 million versus 1.435 million expected. So higher than expected continuing claims, lower than expected initial claims. So mixed results here. Mixed results. Again, the ECB dropped their numbers, and the market just tanked heavy too on those numbers. Or the market ripped up a little bit, but it eventually came back down. What was mixed results, Chris? Unemployment came in higher than expected for continuing claims, lower than expected for initial claims. Yeah, I'll live stream it right here, Ali. Hit that subscribe button, bro. But yeah, we'll live stream it here. You'll be able to watch it, see it here. As soon as it happens, we'll cover everything as soon as it drops. We cover all the big stories, big market catalysts, big earnings, big fundamental releases. If you look at our history of streams, we cover all of them. We cover jobless claims, CPI, FOMC, Jerome Powell speeches. We did Jackson Hole last Friday. And we stream every day anyway. We trade a 30,000, 120K buying power account live every weekday. Hey, all good. All right, guys, look at PIXY going absolutely crazy here. PIXY, I'm starting to believe it has a 500K float because look at that thing go crazy. It's at $25 right now. To just this morning, just today. Wait, let me make sure it's today. Yeah, just today alone, this thing has gone from $12 all the way up to $25. So it's up over 100% just in pre-market session today, and it's still pushing up higher. Up until this last red candle, it had like 8 green candles in a row. And so this thing's going crazy. You think GameStop is going to spike at the open? Maybe. We'll see. Hey, thank you, Jay. I appreciate it. When is Powell speaking? It's going to be at 9:30 or 9:10. I'm sorry, 9:10. I think the actual conference starts at 9, but he's supposed to set schedule to speak at 9:10. So we're going to cover that too. But yeah, Pixie is flying up. Huge potential short squeeze. And again, if the short float is showing what it said on some platforms, which was like 200 plus short float, then, this thing could be a legitimate short squeeze, like a real, crazy parabolic short squeeze. It might not be. Again, I really don't know, but it could. And we'll have to see. Yeah. You figure it'll impact crypto? Yeah, I think anything that broadly influences the market is going to impact crypto as well, in my opinion. So anything that broadly influences crypto or broadly influences the market, I think is going to affect Bitcoin, ETH, crypto as a whole. Just because I think they've been following each other for some time now, especially with like next week's CPI report, the FOMC meeting after that. I think those things are going to influence the market a lot. SPY at 397.20s, 397.20s. Pixie at 23.80s here, 23.80s. So some places are saying the float is 500K for Pixie. Other places are saying it's 300K. SPY popping up a little bit. Look at the SPY bounce. It's at 397.14s. So SPY bouncing up a little bit here. We still got about 15 minutes, 15 to 20 minutes before JP is supposed to speak. And so, yeah, hey, y'all hit that subscribe button if you haven't. Team, let's grow this channel. Pixie at 23.80s right now, 23.80s. We got GameStop at 25.20s. So GameStop is still trying. SPY bouncing back up over 397. What are the chances that you think the SPY is going to hit 400 today? Let me know. What do you guys think in terms of the SPY? What are the chances that it hits 400 today? GameStop at 25s. We got Pixie at 23.40s. All depends on Powell if it hits 400. Yeah, 100% today, Ramsey. Hey, we'll see if you're right, bro. Pull back to 390. Yeah, seeing some. What are your thoughts, positive or negative? So again, now that we have about 10 to 20 minutes before this starts, I'll go ahead and go over my take here. All right. So if you look at the markets, right, I think JP does a pretty good job of balancing it. People give him a lot of heat. But I think if you look at like the history of the last couple months in terms of like Fed and data, you can see like, okay, so if we look at a daily chart here, starting with the July, I believe it was July. Let me look at the look at the actual schedule here. So yeah, so the last meeting was in July. So if you look at July 26th, it was right here, 26th and 27th. This is when the last rate hike decision came in. And it came in on par with expectations, and that was a bullish sign. Jay Powell in the press conference said some favorable things, some positive, optimistic things, that we saw inflationary pressures dropping a little bit, and that, we could have some optimism. And so sure enough, after that, you had a big green reaction to it on the 27th of July, and then the market basically ramped up over the next couple weeks. Then you came to the Jackson Hole Symposium Jay Powell speech, which was right here. It was this big red candle here. Let me make sure you guys can see this on the chart. Yeah, it was this big red candle here. And during that, again, during that, let me make this a little bit larger. There we go. During this, he said some pessimistic signs, some not so optimistic signs. I think he tried to bring people down to earth a little bit, because he might have thought that we were a little bit overbought from the previous one here. And so the last time he spoke, he said some pretty pessimistic, negative things that ended up tanking the market. And so I'm hoping, and again, I'm definitely not saying for certain because I really don't know, but I'm hoping he says positive things here to balance it. And in turn, we get a positive reaction over 400 on the SPY and the S&P over 4K and all that stuff. Again, that's me remaining optimistic. I'm not saying that's going to happen. There's obviously a huge chance that he says some negative things and it ends up tanking the market. When you look at it in terms of extension here, and we do have CPI dropping next week as well, but when you look at it in terms of extension, if we pull up like a 15-day chart here, over the past couple weeks, we're down heavy, but yesterday we did ramp up pretty big on the SPY. So we ended up ripping up really big on the SPY yesterday, having a big rebound day. But the couple weeks before that, we were red. And so in terms of extension, maybe there's an argument for saying we're oversold at this point in time. If you look at like a 20-day chart, here's the market. There could be an argument for us being oversold, but I also think there could be an argument on us being even more shorter term, extended on a bull trap from yesterday. So again, I guess my point is, I don't know. I'm pretty neutral. I hope it's positive. And I think that the argument is there for it being positive and him saying positive things. But with this type of stuff, you never really know. And hopefully it influences the market positively. But yeah, let me know what you guys think. Vote on the poll right now. Again, when I did polling here, we did polls on Twitter. We did polls on YouTube. Most people are bearish. So we did a poll on Twitter. Most people are bearish. On our Twitter votes, we got 76% of people saying puts on the Jay Powell and jobless claims numbers. Only 24% said calls. If we look at YouTube specifically here, YouTube, we had almost 700 votes. So the most votes by far on any of our polls, over 700 votes now. And we had 57% say no, they're not expecting a positive reaction to the JP speech, and 43% saying yes, they are expecting a positive reaction. And so again, we'll see. I'm hoping he says some good stuff, but in this instance, nobody really knows, and time will tell. We'll have to wait and see. Just before we're going to stream the entire conference live here as we do as well. Y'all can hear the music, right? Let me know. I just want to make sure y'all can hear the music, because that means that my audio is coming through, which means you're going to be able to hear the JP speech as well. So yeah. Well, that's not really true. I mean, the Fed rate hike decision, he said some pretty optimistic things, and the rest of the Fed did in late July. After the CPI report as well, we had some pretty positive things from that on the latest CPI report. So I think that he does an okay job of balancing it. Man, y'all got to realize, like, that's a hard job for anybody, bro. Like, no matter what, the market goes up, he doesn't really get credit. Market goes down, everybody blames him. You know what I mean? And so in the end, it's a tough job, man. I feel for him. I wouldn't want that job. But all right, cool. As long as y'all can hear the music, nice. It ramped up yesterday. Maybe we'll look at easing towards the end of the year, and market went up 400 points. So again, you think we're overbought now? Yeah, poor dude. Yeah, basically, Menina. I really have no idea. Again, I want the market to go up. I think the argument is there, but I really have no idea. Nobody does, and we'll see. But I hope it goes up. Bear. Oh, bro, I'm Warren Buffett number 2. That's me. It's almost an impossible job balanced on old finite information. Yeah, 100%. I think we tanked today. Hope so. Hey, I hope we don't. But we are tanking right now. So look, leading into this, market's dropping here. Market down to 396.70s. 396.70. So again, we'll see what we get, bro. It's a tough market, man, right now. We'll see. $396.70s. Gamestop at 25s. We got Tesla at 282s. All right, guys, so 25.15 on GameStop here. But yeah, Tesla, market dipping. Market just broke lows of pre-market. Pixie up to 23 again. Here, market break it down here, guys. We got 4 minutes. I think the press cut. Let me see. I'm gonna go ahead and join the waiting room of the press conference so we can get this started. I'm gonna go ahead and mute the audio for a second while I get the press conference set up and ready here, team. So bear with me, guys. Where'd it go? Okay, no, that's not it. Oh, I see. Okay, I got it. All right, guys. 3 minutes until this starts. About 3 minutes. Again, we are in the wait room. We are waiting now. And yeah, let's do this, guys. Y'all hit that subscribe button. Yeah, market's tanking a little bit down to 296 or 396s here. 396s on this. All right, guys, we are ready here, team. We are ready. Tesla bouncing up a little bit, man. Look at Pixie, man. I'm heavily interested in Pixie here if it continues to rip up. It could be a crazy short squeeze, man. Some of the data that I've been seeing behind this could be the next big one. Again, I'm not saying it will. I have no idea whether it will or not. Maybe I'm just wildly wrong about this, but it's up over 100% today alone in pre-market. More than that if you look at the entire extended hour session. So just big movement there. Again, we got less than 2 minutes before the Jay Powell speech. We are waiting in the waiting room right now, waiting for the speech to start. It says it's going to start in 1 minute. And again, we're going to stream everything live here as we do. Again, let us know what you guys think. Yeah, so Powell speaks at 10 a.m. in 15 minutes. Sure. But the conference actually starts in a minute. So, we're in the wait room already. Bitcoin, I think Bitcoin's going to be affected by it for sure. Bitcoin's been affected by most fundamental releases, especially like CPI and FOMC. And the last Jackson Hole symposium speech certainly affected Bitcoin. And so Bitcoin's going to be affected by this as well. Yeah, the speech starts at 9:10, but I'm in the waiting room already. And all right, so it says it's live. All right, so hold on 1 second. Let me I'm going to mute this and watch this to make sure. Okay, that's it. They got some hold music waiting. All right, so we turn the volume off here so we can't hear it, so we can get the music back running. But yeah, we are in the wait room. Pixie Catalyst, I believe they had some type of so Pixie is aiming to spin off Shift Pixie Labs and dividend its digital securities to shareholders, is what they're saying here. That's essentially what's going on here. All right, so yeah, we got 10 minutes before the event starts. We are in the wait room now. All right, so yeah, this is the Cato Institute's 40th Annual Monetary Conference. The state of monetary policy after 40 years is what's going on here. Again, guys, calls or puts, vote. Hey, what's up, Rick? Hey, good morning, bro. Hope you're doing good, man. Hey, what's up, Pauls? Psychology market going up. SPY hit 396s here, 396s. Again, we got about 10 minutes before it starts. Right now, we are just kind of chilling here in the weight room. We can kind of see they have our event will begin shortly, so it still has not started yet. We're just kind of waiting here. Again, we're going to cover it as soon as it goes live. I wonder if it lets me pop this out. Either way, we're going to put it up on screen. me see if I can start building that now. So we got a clear little screen for you guys. Yeah, there we go. Okay, that should be good. Oh yeah. All right, so the screen just faded out. Okay, so the screen just faded out here on the conference, guys. So let me show you guys what we're looking at.
Welcome to Cato's 40th Annual Monetary Conference. Pleasure to have you with us today.
I'm going to refresh this.
The search for stable.
I'm going to refresh this just to make sure we're completely live. What? All right, guys, give me 1 second. All right, so for whatever reason, it says the event has not started yet.
Percent in the longer run.
There we go.
Yet, no specific time frame was given. This flexibility increases uncertainty about the Fed's commitment to price stability. Until recently, the Fed's mantra in setting its policy rate was lower for longer. The forward guidance was often misguided. The Fed's macro models were unreliable, and forecasting errors eroded confidence in monetary policymaking. The Fed initially saw inflation as transitory and was slow to increase its policy rate. However, the consensus has changed, and the Fed has made it clear that rates will rise until inflation falls to a more normal level, even if the U.S. faces a recession. Of course, the underlying problem with our current monetary regime is that too much is expected from policymakers. The limits of monetary policy are often forgotten. Moreover, there is no clear rule for guiding policy. Carl Brunner, who spoke at Cato's first monetary conference, pointed to the importance of rules in the conduct of monetary policy, given the complexity of the real economy and the knowledge problem. According to Brunner, quote, we suffer neither under total ignorance, nor do we enjoy full knowledge. A non-activist, that is rules-based regime, emerges under the circumstances as the safest strategy. It does not assure us that economic fluctuations will be avoided, but it will assure us that monetary policy does not impose additional uncertainties on the marketplace.
Okay.
With its large staff of economists and access to massive amounts of data, the Fed missed forecasting the 2008 financial crisis and missed warning signs of the current inflation. At a forum hosted by the ECB in June, Fed Chairman Jerome Powell stated, quote, "We now understand better how little we understand about inflation," close quote. I hope today's conference will help shed light on the causes of inflation and provide positive lessons for improving monetary policy.
Let's see, guys.
Before moving to the first, Earl J. Bowen Jr. and Duval Bowen Family Foundation for supporting today's event. I'd also like to thank Cato's excellent staff for helping with the conference, especially Nick Anthony and Kiana Graham, as well as David Tassi and Jonathan Fields.
You can see the SPY on the left
thanks
here.
Thanks to all our speakers and moderators for taking time from your busy schedules to join us. Now let's begin with Fed Chairman Jay Powell. And
all right, Jay Powell,
President and CEO of the Cato Institute.
Here, you can see the SPY right here on the left. Here's Jay Powell.
Thanks, Jim. Good morning, everyone. As Jim said, I'm Peter Gettler. It's my honor and privilege to be president of the Cato Institute. Before proceeding, I want to offer my congratulations to you, Jim. Cato's been an important voice in the monetary realm for over 4 decades. And while there are lots of people who have contributed to this, no one has contributed more to this work than our colleague, Jim Dorn, who's played as large a role as anyone. Jim inaugurated our monetary conference, and under his leadership, it's become an annual institution. Jim's presided over each of these conferences, including today's, which, as he pointed out, is our 40th. Following these past 40 years of service to Cato and our mission, during which he also created and edited our Cato Journal, Jim will be retiring later this month and will assume the title of Senior Fellow Emeritus at the Institute. Jim, I just wanted to offer our heartfelt thanks for your many contributions as one of the longest tenured employees in Cato's history. And I offer you best wishes for a fruitful and enjoyable retirement. I know you'll continue to make your voice heard in the policy debates and in the policy world, but I also hope you reserve plenty of time to enjoy your wonderful family. And now let's turn to our 40th Annual Monetary Conference. It's my honor and pleasure to welcome Fed Chair Jerome Powell to the conference. Along with Alan Greenspan and Ben Bernanke, he's now the third chair of the Federal Reserve Board of Governors to address the conference. Jerome Powell was first appointed as chair in 2018 and then reappointed this past spring. And he's no stranger to the Fed. Prior to his time as chair, he served as a member of the Board of Governors starting just over 10 years ago.
That is okay.
The one certainty that seems to come with the position of Fed chair is that one will invariably face a time of great challenge. Paul Volcker confronted our last and worst bout of inflation. Alan Greenspan saw the stock market crash a mere 2 months after his confirmation. And Ben Bernanke led the Federal Reserve amidst the financial crisis of 2007 and 2008. And Chairman Powell, as we all know, has served throughout the COVID-19 pandemic and its aftermath, a period in which we've seen inflation reach its highest level in 40 years. As we've sat in front of Zoom screens over the past 2.5 years, I'll just speak for myself. Many of us have watched as our hair has turned grayer, but few of us have as good an excuse for this as Chairman Powell. We're delighted to have him with us today to have a conversation about key policy issues, what he's learned, and the challenges now facing the Fed. Chairman Powell, it's good to see you today, sir. Welcome.
All right, let's see what he says.
Thank you very much, Peter.
Market tanking
And
down.
Thank you. Go ahead.
I don't think it's a failure of imagination on my part, nor do I believe anyone will be surprised if the first topic we turn to is inflation.
Here we go.
As Jim mentioned, it seems policymakers were given, including at the Fed, were initially given a bit of a head fake on inflation. We heard policymakers ascribing the increase in price inflation to the pandemic and related supply disruptions. And while this has undoubtedly contributed, there seems a much stronger consensus now that it's been in larger part policy driven. Can you discuss for us or give us some insight into how your thinking evolved on,
right, here we go.
On this topic over the last year and a half, and how those conclusions may have evolved as well?
So, Peter, thank you, and Jim, thank you, and congratulations to both of you and to Cato on 40 years of great monetary policy conferences. So I think a good entry point for that question, Peter, is to start by recalling that before the pandemic, unemployment was at a 50-year low, inflation was low and stable, and the economy was growing steadily, with no obvious imbalances threatening continued expansion. So, of course, in that sense, none of this high inflation that we see around the world now would have happened without the pandemic. The pandemic severely disrupted the economy, gave rise to risks of much more dire economic consequences than actually transpired really. And that was thanks in part to the policy response. So to start with policy, there's no question that policy certainly supported strong demand. But in my view, you would not have seen anything like the inflation that we have seen without the pandemic effects. And those pandemic effects include both shifts in demand and also playing a role in, not solely causing, but playing a role in the supply side constraints that emerged. So as for the pandemic, it did lead directly to an extraordinary shift in demand away from in-person services and to goods. And that shift, of course, was a major contributor to inflation in goods prices, which was really the main inflation story at the very beginning when inflation broke out suddenly in March of 2021. It's worth remembering that inflation actually declined in the early stage of the pandemic and then suddenly rose up in March of 21. The pandemic also contributed to the constrained supply in a number of important ways, including a large and persistent reduction in the size of the labor force, which contributed to extremely tight labor market conditions and upward pressure on wages. Also,
Thoughts,
the
guys?
turmoil in global supply chains was probably caused to some extent by pandemic-related shutdowns, as well as strong demand, and particularly goods demand. I think cars are a good example. So yes, people had money and rates were low and demand for cars was strong, but also the pandemic shifted demand upward for cars because some people wanted to avoid public transportation. That amped up new demand for new and used cars. And also the shortage of semiconductors for cars emerged from pandemic-related demand shifts as well.
Market breaking lows.
The bottom line for me is that there's really a role for both here, and the two are tangled up in a way that it's really not easy to disentangle.
Those of us who grew up in the 70s, I think that the danger and cost of inflation, can't be exaggerated.
Of course.
In September of
Yeah.
1979, his first testimony, a month after he was confirmed, Paul Volcker made clear he understood the damage that was being caused by inflation and the need to bring it down, even if it required great costs in other economic ways.
Market breaking lows.
One of the lessons of that episode was the greater the extent to which inflation slips the leash, the higher the cost and greater economic damage necessary to bring it under control. I worry whether we have the resolve to bring inflation under control today to face the potential economic costs. I took some comfort from your recent remarks in Jackson Hole, which seemed an attempt to signal that kind of resolve. But I do remain concerned that, the intense political pressure that might be brought to bear to avoid collateral economic damage before the inflation fight is won. And I just wondered if there's any way you can help me sleep a little bit better on that score.
All right, so let's see if he says something positive here.
Sure. So I think it's worth going back and remembering, and I pointed this out in my remarks 2 weeks ago at Jackson Hole, 10 days ago, that what Paul Volcker did and the Fed did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the great inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard to get inflation down in that case. So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. That speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which
Market
we mean
bouncing.
2% inflation over time. That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. We are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not. We focus solely on the goals that Congress has given us, and that's what we're going to do here.
Market bounced a little bit.
That's really important because it's clear that we could see, political pressure coming to avoid economic costs when there could be claims from political players that, inflation is back in its box, long before it is. Jim mentioned in his opening remarks that 2 years ago you moved to a new framework, flexible average inflation targeting, and I'm bringing this up now because, again, just reiterating the point about trying to sleep better at night. By many accounts, this move has created some more uncertainty in the market, as Jim mentioned, and coming at a time when inflation now has increased so markedly, it creates concern that despite your stated resolve, the commitment to price stability has become less strong. Should you consider modifications to this framework to assuage these concerns and better manage short-term expectations?
Market breaking lows, guys.
The framework, we began the work on the new framework in 2018, and we announced the results in August of 2020. And it really followed 25 years, basically, of global disinflationary forces. And the problem was that monetary policy rates were close to the effective lower bound much too much of the time, much too close, and even during good times. So that meant that central banks were having a hard time all over the world, finding ways to support the economy when it was needed. And that's why central banks, including the Fed, resorted to things like forward guidance and asset purchases. So that's why we did that. But the changes that we made were sort of a very mainstream part of a literature around makeup strategies. But really the point of our framework changes, the point of all of them was to, and we said this very clearly, was to have inflation expectations well anchored at 2%. That the average inflation targeting idea was meant to support having inflation expectations. That is the goal at 2%. And the reason is that we believe that the public's expectations of future inflation will play an important role in the actual path of inflation. So that is kind of the fundamental basis of our framework. And as I just discussed, it is very important that inflation expectations remain anchored. I think the evidence today is that if you look at longer term expectations by households, businesses, and forecasters, and also markets, you'll see that they are pretty well anchored around 2%. Of course, short-term expectations are higher because of high current inflation, and also the clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making. And our job is to make sure that doesn't happen. And we're committed to doing that job.
Thoughts, guys? No, we are not fake, by the way.
To me, there's a chance that there's a real risk that the labor market, that the labor shortages persist. Does that create a risk that takes some of the ability to manage this process out of your hands? To the extent that there continue to be labor shortages, does that then feed into expectations that the public has about inflation, as you mentioned very prominently?
Well, I think you're right that if it does turn out that we are in a world of a persistent labor shortage over time, that'll be a challenging world for companies, and it will certainly create upward pressure on wages and that sort of thing. Today, the labor market demand is very, very strong still in the labor market. We're still printing new payroll job numbers at a high level. Wages are running at elevated levels, and so we think by our policy interventions, what we hope to achieve is a period of growth below trend, which will cause the labor market to get back into better balance, and that will bring wages back down to levels that are more consistent with 2% inflation over time. That's what we're trying to achieve.
Okay. Thoughts, guys?
The shock to labor supply that we got from the pandemic was large and unexpected, and unfortunately persistent. I will say that just in the very last labor market report that we got last Friday, we did see a welcome increase in labor force participation. Nonetheless, still a full percentage point below where it was before the crisis. And I think it's important as a society that we have measures in place to support a strong labor market and high labor force participation, and that goes beyond what we can accomplish with monetary policy.
You buying this dip, guys? Let me know.
You've made some contrast to how things are different today. What's different today from the high inflationary period of the late 70s and early 80s? I guess some other distinctions are, I remember as a student in Boston in the early 80s, in the days before the internet, I remember seeing people actually line up at the Fidelity office to see the monetary aggregates released on a weekly basis. And the way the money travels through the economy has changed dramatically since Milton Friedman first said that inflation is always and everywhere a monetary phenomenon. I'm just wondering, how do you respond when people look to the huge spike in government spending and say, I think you answered this in part in the first question, but that, when you look at the huge spike in spending and say the Fed's printed all this money, so of course we have inflation.
So I graduated from college in 1975, which was close to peak monetarism, and there was quite a focus on monetary aggregates, and I recall it just as you do. So to go to this current situation, so as part of our response to the pandemic, we did resort to large asset purchases to address what were pretty severe disruptions in markets, and then also to support the economy, and our balance sheet expanded dramatically. But remember that our purchases of securities don't actually increase the quantity of government obligations held by the public. They really change the mix because we issue bank reserves to pay for those securities. So we're not changing, the quantity of obligations. That is not to say that money growth wasn't high. It was, of course, extraordinarily high in 2020, and then slowed down in 21, and now is quite sluggish. And I guess I would just say it this way: whatever caused, there are different theories on what caused the inflation that so suddenly jumped up out of the ground in March of 2021. Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time. And so literally changes in monetary aggregates have not had a consistent, reliable relationship. They haven't been a good predictor of the economy or of inflation. Now, of course, the economy is ever changing, and that too could change, to where it is important again. But for now, and for really many years now, monetary aggregates don't play an important role in our formulation of policy, and we don't think they're generally a good way to think about policy or about inflation. It's more about demand and supply and things like that.
Market testing lows again.
So that's where we would be on that.
Yes, we do, pause.
That actually calls to mind, at Cato, we do have a strong aversion to a fully discretionary fiat money system. And so we do like to socialize and promote alternative frameworks that could put policy and a market direction that eliminates some of this discretion. Jim mentioned that a consistent theme over the years of this conference has been, potential monetary rules. And that kind of calls into question whether inflation and prices are really the best targets to use for monetary policy. Some folks have advocated for a rules-based system, such as targeting nominal GDP is something we've heard a lot about in recent years, partly because, as you say, monetary policy is not suited to address, well suited to address supply shocks. Could you share with us some of your thoughts of that type of approach and whether it's something that you would consider?
So more broadly on rules, of course, Taylor rules have become part of the fabric of economic analysis and particularly monetary policy analysis in ways that must be far greater than John Taylor could have hoped when he wrote his original article in 1993. So, but no central bank and the Fed has never explicitly tied our monetary policy decisions to any formula, including Taylor rules. But Taylor rules, nonetheless, are ubiquitous in all of the work that we do. You have to have a variable, or a way and a model of explaining how monetary policy will react, and some kind of Taylor rule is now very much part of the way we think. In terms of nominal income targeting, and by the way, I know that Cato is one of the home courts for nominal income targeting, along with Mercatus and some others. And I know that this is a lot of well-known experts, many of them at your institution, do support nominal income targeting. And I'll just say that, we've looked at that, I've looked at that, and really come to the view that nominal income targeting is not the right way to go. And I'll try to explain why. By the way, I know that these arguments are well known to nominal income targeters and will be found to be unpersuasive. But nonetheless, I'll just give you my
and one thing I would interject is that we have debates internally as well. And I think for us, the concept really is more wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis and again remove discretion.
I think that's a very healthy process, and the whole debate over many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two. I think but getting to nominal income targeting, we've got a dual mandate: maximum employment and price stability, and it comes down to, is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is. And part of that just is that it would be, I think, very difficult to explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's a level of complexity that, even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put the, for us to have that be our fundamental framework. And a couple of examples that would be difficult. One in particular would be, what do you do with changes in trend growth? We have, highly uncertain estimates of levels of trend growth that we amend down through the years, and many years many years later, we may have a very different view, but it is broadly understood, I think, or believed, thought that trend growth has declined considerably rather, over the course of since the global financial crisis. So how do you incorporate that into a nominal income target? Do you just raise the contribution of inflation, or do you annually re-estimate trend growth? And if you do that, you're incorporating both communications issues, but also, just big chances of policy error, because we just don't know these things with that kind of, we don't know any of the starred variables, so to speak, with that level of certainty. So I'll just say it's really interesting, and it works very well in models, but it seems difficult to implement from a practical standpoint, and it's not something that we have chosen to do, or that we are currently looking at.
Thoughts, guys?
You mentioned a dual mandate.
Thoughts?
I don't want to ignore the unemployment rate during this conversation. When I said earlier that, we obviously have an aversion to a, fully discretionary monetary system, many of us also regret the adoption of the dual mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept that, does it really make sense for employment to be part of the Fed's mandate?
So, Peter, as you know, we're created by Congress in statute, and Congress assigns our goals, and it has assigned maximum employment and price stability. It's my view that the dual mandate has served the public well and is generally workable. In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all. So I don't see a case for moving to a single mandate, but that's really a question for Congress, and we will of course implement whatever mandate Congress gives us. To your point about maximum employment, it's true that, and we do say that and have for some time, that non-monetary factors are really what drives the level of maximum employment, which clearly changes through the business cycle and over time. But we can and do assess that, and we do it transparency, and Congress has said that should be a goal, a co-equal goal with price stability. So that's what we're implementing. And again, I don't think there's a strong case for changing that. I don't think it hampers us in our pursuit, and I think we can achieve both goals in the medium term.
Market opens up in about a minute and a half.
You started out saying
1.5 minutes, guys.
Mandate, and so my follow-up was going to be, well, should the mandate, should they consider changing the mandate? And I think you've answered that. But I guess a natural follow-up might be then that, if the dual mandate weren't enough, there's been talk of adding more elements to, the Fed's objectives, including like racial equity that seem, far from the Fed's ability to address. In addition, the Fed's remit has expanded from the banking system to the broader financial system, and its regulatory responsibilities were widely expanded in the wake of the financial crisis. How does continuing expanding the Fed's mandates not undermine focus on that fundamental responsibility of monetary stability, beyond things such as the employment element of the mandate?
So I think our current mandate is appropriate, and I would not want to see it narrowed or broadened, for that matter. We've got narrow and we've got well-defined goals that we're supposed to pursue. And what we've gotten with that is a precious grant of independence that lets us pursue those goals without direct political control. For monetary policy, that's maximum employment and price stability. And I think that dual mandate has served the public well. I really don't think it would not be a good idea to broaden it to goals that might be inconsistent with those two mandates, and that would be very difficult for us to achieve with our tools. More broadly than that, though, I think it's really important that we stick to our assigned tasks and resist the temptation to take on issues that are the province of elected representatives or of Congress. And if we do that, if we do stray from our core mandates, that will eventually undermine the case for our remaining independent. And I think, Fed independence is an institutional arrangement that has served the public well. And I think that's pretty well documented and accepted.
I mentioned a couple of times, our concern about a fully discretionary system. And one of the biggest of those concerns is that in the face of, large economic dislocations, We've been running, what really amount to unprecedented experiments. I would cite the, quadrupling of the Fed's balance sheet in the wake of the 2008 financial crisis, and then, doubling it again during the pandemic. To your credit, it was right before the pandemic that you were beginning to move towards reducing the balance sheet. Could you shed some light for us on where you hope to take the balance sheet over time, and what's the way that you really try to get there? Do you see the Fed ever moving back to a scarce reserve framework like it had before the 2008 crisis?
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014 and then allowed it to shrink passively relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. Then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion of runoff per year. That process began in June. Once it's up to full speed, process began in June, and the pace of the balance sheet increases, actually rises this month. The plans are spelled out in detail on our website around the January and May meetings.
Thoughts,
And of
guys?
course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed as a result of the global financial crisis and the pandemic. The scarce reserves framework would be challenged to work in a world where there's very high and sometimes volatile demand for safe and liquid assets. Central banks may need to rely on large-scale asset purchases again from time to time in response to severe shocks. And remember that the large financial institutions hold very, very large quantities of safe assets now as a liquidity buffer, and that includes a lot of reserves. So the bottom line is that the quantity of reserves is just so much higher. It would seem to be impractical to try to manage scarcity, and demand will be volatile too. So it doesn't seem practical. And again, we think that the current system works well and provides a lot of liquidity to the system, which is kind of a net gain.
Please don't spam.
To shift gears a little bit away from inflation and monetary policy.
So that's all the inflation
I
talks.
remember in the first year I joined Cato, I read an op-ed in the Wall Street Journal advocating for the Fed to implement a digital currency. And I was kind of horrified at the privacy implications of this prospect, and said so in a letter to the editor at that time. Since then, the Fed has formally stepped into the digital currency ring, and digital currency has obviously been a very recurring theme in these conferences. But the Fed has stepped into this arena with a discussion paper on a central bank digital currency and several speeches from Fed governors. Our team has reviewed the more than 2,000 comments that the Fed's central bank digital currency discussion paper received, and we find that about 2/3 of them are concerned or outright opposed to the idea. Commenters raised concerns of financial privacy, financial oppression, and disintermediating the bank system, some of the same concerns that led me to write that letter to the editor 7 years ago. How can these serious concerns about privacy and freedom be reconciled with a digital currency?
Let me start by saying
Crypto is what they're talking about now.
We haven't made any decisions at all about whether to issue a CBDC, and we continue to evaluate the pros and cons and look at the technical questions and the policy questions, and we expect that evaluation process is going to take some time, appropriately so. Secondly, I'll say that we do not intend to proceed with issuance of a CBDC without clear support from both the executive branch and from Congress, ideally in the form of a specific authorizing law. So we did get, it was very gratifying, 2,000 and some comments. And, you know, I won't tell you that I've read those, but I've read all of them, but I've read some of them and I've read the summaries. And, you know, it's a lot of very thoughtful concerns, including the ones that you raised. And they're things that we're considering very seriously. So we in our own paper, we suggested that a CBDC in our jurisdiction should be privacy protected, intermediated, widely transferable, and identity verified. So on privacy protection, let's start with that. Very, very important. And you know, we all see what's happening with the digital RMB and you know, and the issues with privacy. We would not want a world in which the government sees in real time every money transfer that anyone makes with a CBDC. That would not be something that would be at all attractive in the American context.
Well, I like that. I like that. What he's saying now
is going to be extremely important, and we're attentive to striking a balance, of course, between law enforcement and privacy protection. But that can be managed in the same way that it's currently managed in the banking system, or in some similar way. In terms of another issue, really is disintermediation, and you know that really is a question of, if say you had an interest-bearing CBDC, it could be attractive. It could compete with deposits, could draw deposits out of the banking system. That could limit credit availability. That's another issue to be managed. I think one of the things that actually that Cato mentioned in your was also the run risk issue, and that is the question of, are you creating an asset that would be very attractive in, you know, in a panic or severe stress situation, and you know, fostering runs. So look, it's going to be, as I mentioned, it's going to be, we think our role is this. We want to carefully and thoroughly analyze the public policy and technological challenges, public policy trade-offs and technological challenges. That's what we're doing. The idea is that this will lead all of us to a better understanding of those trade-offs and prepare the way for, hopefully, a well-informed decision on whether and when to issue a dollar central bank digital currency. That's what we think our role is. And we think that the Fed is the right institution to do that. We can proceed without, you know, we're a nonpartisan institution, non-political institution that we can do these things, and I hope present conclusions and analysis that will support an intelligent decision.
Thoughts?
It's time to make that.
Thoughts on crypto?
This is something we'll definitely be having a lot to say on in the future.
That's interesting
as well, particularly from a perspective of you know, of privacy concerns. That's and being a watchdog on those issues, you know, is a very important role for Cato. I do want to ask about cryptocurrency, you know, but first I should probably,
here we go.
in fairness, reveal that the gentleman who photobombed Janet Yellen 5 years ago by holding up a buy Bitcoin sign behind her during her Humphrey Hawkins testimony earlier this year became my son-in-law. So that's a little bit of a disclaimer I'm going to put out there. But without debating the merits of future cryptocurrencies generally, or one or another crypto products, I'll say that in the monetary arena, you know, Cato stands for nothing if not a desire to see more interest in monetary policy, to see more people concerned about our discretionary fiat system. And also, we want to see private market innovation and experimentation in developing alternatives. And crypto is just such a great example of this. There's a long history of government and regulation thwarting such innovation and experimentation, which you know, we find really disappointing. So I wonder if you could respond to these kinds of concerns, namely that, you know, regulators might ultimately strangle, you know, crypto to the extent that it really does develop into a viable alternative system.
Subscribe, guys. Subscribe. Free content.
So I'll talk about it in two pieces. One is unbacked cryptocurrencies as such, and you know, those have not and don't appear to offer, have not offered and don't appear to offer much in the way of public interest in using them as payments. Let's say it's not a great store of value. What it is a speculative asset. It's not backed by anything.
There could be an argument that that's still during the development phase, and that it's something that we could see emerge. But
yes,
be that as it may.
Bitcoin moving up.
I also have close-in family members who offer that perspective vigorously. So, as you suggest. But stable coins is a different thing, and the question is, are there forms of private money like stable coins which can play a role in our financial system, which would, and the answer is, of course, that we don't want to stand in the way of appropriate innovation, particularly including, digital innovation. But we think that something like that, which is, purporting to be money, would need to be appropriately regulated. And I hear that wide agreement on that, by the way, from a lot of the stablecoin companies now.
Yeah, they want regulation.
Part of getting to a place where they are a legitimate part of the financial system. So I think you need regulation. If people are going to think something is money,
it's going to make it better.
It needs to actually have the qualities of money. And if it doesn't, then you don't want. I don't think you want to take money and make it into just another consumer product where sometimes it fails and sometimes it's good. You want it to be guaranteed to be good. If the public's going to look at it like it was a dollar, you want to have clarity, transparency. You want to have full reserves of very liquid, high quality assets, and things like that. That's all. So I think that we need legislation on this. Just it's typical of technological innovations.
Markets popping up, broke
regulatory
highs.
Framework that really gets after payment stable coins. And so I think that's what's needed. But I wouldn't think of us as being opposed to that kind of innovation. We're more the people who are saying, among others, that we need appropriate regulation.
Mm-hmm. Yeah, and it doubles ultimately in the details. I mean, while we have these debates,
market ripping,
we're living in a world where we will see innovation, and we basically promoted, a light touch, market focused approach, because there is a real risk of again, having an impact on the development of these innovations and really thwarting what could be very promising and useful innovation.
No, and I agree with that. We don't want to be in that place. We want to be in favor of innovation, but also of appropriate regulation.
Mm-hmm. And ultimately, some of the people who end up driving, the regulation might be, you mentioned legislation. The end product may not meet the objectives that you and I both say that we want.
Bitcoin surging up here. Look at Bitcoin.
Another topic, as long as I can remember, successive chairmen have warned of our unsustainable fiscal path. Regrettably, no one in Congress or the White House seems to be listening. I'm, particularly during a period of high inflation, I've been, continually chagrined that, the number of big spending bills that continue to come down the pike and legislation that's passed, long after I think that, the crisis of the pandemic has ended. The lessons of the financial crisis in COVID might be that keeping our fiscal house in order is essential as preparation to meet the challenges of unexpected but inevitable, economic dislocations. But the opposite lesson seems to have been learned, that we can keep spending, whatever we wish without worrying about a day of reckoning. And I just, I'm very concerned about the day of reckoning and what risks we're laying for the economic well-being of future generations. And I just wonder, your thoughts on those concerns and, the potential timing of that day's arrival and its consequences, and whether you have any ideas about how we can build a real constituency for fiscal responsibility in America.
So I do share those concerns, and in fact, I was working on those issues before I joined the Fed. But at the Fed, my position needs to be that fiscal policy really is the responsibility of Congress and the administration. Wouldn't be appropriate for me to comment too much on specific policy proposals or laws. More to the point, with inflation running so far above 2%, this is probably an especially good time to focus on achieving our own mandate rather than doling out advice to others. But like my predecessors, I'll point out that our federal fiscal policy is not on a sustainable path, and it really hasn't been for some time. And we will need to get back to a sustainable path sooner or later. To your point, sooner is better than later. And I guess I'll just leave it at that.
All right, thanks. We're
Thoughts,
getting
guys?
close to the
Thoughts?
end of our time, so I'm thinking about a closing question.
All right, one more question. Let's see what he says. Hit that subscribe button, guys.
I wonder, with everything that we've discussed thus far, what are some of the key lessons that you've learned since you became Fed chair? And what advice might you give to a lot of the young, monetary scholars out there that Cato and other places are working to develop?
So I guess I would say that both experience and also studying history are great teachers of what can be hard lessons. And I actually mentioned 3 lessons at Jackson Hole 10 days ago, and those were first that the Fed does have and accept responsibility for price stability. Even now, some are questioning that, but that to us is settled. Secondly, that inflation expectations are really important and need to be carefully monitored, because if they do move up, they can make the job of getting back to price stability so much harder. And third is that, the record is there is a record of failed attempts to get inflation under control, which only raises the ultimate cost to society of getting under control, hence the need to do this job now and keep at it. So those are 3 lessons. I would say more broadly, another really fundamental lesson to me is that the structure of the economy is ever changing and highly complex. And we see that today around the world. Many nations are experiencing the first high inflation in 40 years all around the world. Different countries have different composition and backstories, but it's really quite global. And the question really is this going to be a temporary thing that's really related to the pandemic in some way, or is there actually something more structural and persistent happening? For example, if we're moving to a world where we're going to see more frequent, larger, and more persistent supply shocks for whatever reason, that will have critical and difficult implications for the conduct of economic policy and monetary policy in particular. So this is not possible to know right now, but it's certainly a question that looms. I mean, to sum it up, I would just say economics is not physics. There isn't any specific temperature at which the economy boils over. It does boil over from time to time. And when that happens, it often takes many years of analysis, discussion, and debate to reach general agreement on why that has happened. So the point is that we are always making monetary policy under high uncertainty about the structure of the economy and the path ahead. That makes our work challenging. It also makes getting it right very important for the people that we serve. And we do think about that every day. So our understanding of the economy has to evolve. As the economy evolves, as time passes, we do learn more. And I think it's okay to follow the evidence and change one's mind. I think advice to scholars, young and old, is that people shouldn't be afraid to say that they've changed their view and explain why. I actually find that refreshing when people say, my view has evolved in the face of the evidence. I guess one more word to close for those young researchers you mentioned. And this is a commercial for public service and for the Fed. So the Fed is a very special place where people can combine policy research with policy making. This is a place that all of us have a very strong sense of mission in our work, which is very satisfying. And that mission is to serve the public. And it really matters. Our work really matters to the public. I would say there's no higher calling or more satisfying mission. So I hope that young researchers and economists and others will consider public service as part of their career. For me, it's been only a part, but in particular, consider working at the Fed.
Market ripping up.
Welcome.
All right.
Thanks for that. I mean, I share those sentiments. As you mentioned your work at the Bipartisan Research Center, and I'm at Cato because I care about the future of our country and the future, of course, of liberty and freedom in America, and for the kind of world future generations are going to grow up in, whether they're going to have the same opportunities that we all have had to live in a free country and to pursue their American dream, and being part of that is a real privilege. I know, at Cato, we work very hard to raise consciousness of monetary policy and the potential for monetary reform. We wish that, we think this is a very important topic, and that more Americans should pay attention to it, even though it's complicated. We wish there were more policy organizations that would prioritize this policy area and raise their level of resources dedicated to this area. And
Market pulling back.
Mr. Chairman, Cato is not shy about being critical, and we enjoy intellectually jousting with you and your team, but we also recognize that we share common
respect
goals and objectives.
I can appreciate it
for our country, and it's in the country's best interests by which that jousting and those debates and areas of disagreement, it's within that context that they occur. And so I do thank you for your work. You're in a challenging position, and I thank you very much for being part of this conference today. It's been a real pleasure.
All right, guys, thoughts on this?
Peter, the pleasure is mine too.
Thanks so much. And with that,
all right, guys,
I'm just going to let all the viewers know that we're going to be taking a break now until the top of the hour. So we're going to reconvene with the
at 10 a.m.
at 10 a.m.
Okay.
So we'll see you then.
All right, guys. So let me know what you guys think about this. Mostly, this is what happened since then, okay? The market has dipped all the way down. Everybody, thank you so much for helping me hit 84,000 subscribers. We've been kind of trying to trade and do a little bit of everything while this talk and speech is going on. But yeah, let me know, guys. Let me know what you guys thought. Again, hit the subscribe button if you have not already. Hit the notification bell. We certainly appreciate all the love and support. Yeah, we'll see what we get. I can respect the fact that even if they disagree on things, that they can get together and kind of have these debates. I think that's very healthy for people. I think, a lot of people hate on Jerome Powell, but that's a tough job, man. No matter what happens, people are going to be mad at him, whether he raises rates, lowers rates, whether the market does well. They're not giving him credit when the market does bad. They're blaming him for everything. And that's just kind of the state of how it's always been with the Fed. But let me know what you guys think. Market is actually ripping up. It's over the 200 moving average. You can see the Q broken over the 200 moving average about 2 minutes ago. Over VWAP, looking very strong. Relative to where we were, we're actually starting to move up. We're up to 298.60s here. If we can break 299, we're over the previous closing price. We're going to be close to $400, and I think we might have enough momentum to start making that test for it. Again, if you're just now joining us, hit that subscribe button. Everything we do here is free. We don't charge a penny for any content. We drop all the major fundamental data releases. Bro, how many ads does TradingView have, man? Sheesh. Yeah, there's crypto. I'm just going to put another chart up and put, if I want to put Bitcoin on this chart, I will. I can just put /Bitcoin if you guys want to watch Bitcoin. There's Bitcoin futures if you want to look at that. Bitcoin popped up a little bit, corrected down some. But yeah, so let me know what you guys thought about this. Again, we drop all the major economic releases here on this channel. We trade live. We trade 120,000 buying power account. You kind of see me scalping around. I'm getting in and out of stuff, day trading. I trade a 30,000, 120K buying power account every day right here. So hit that subscribe button. And again, thank you guys so much for helping me hit 84,000 subscribers. And let's start trading here. We'll come back to the Fed meeting and play it again as we trade like we have been. We're over the 200 moving average, and we're just going to look for a dip. We're a little bit too extended short term for me to want to buy it for a short term trade. But my longer term investments are doing much better now that, the market's pumping up, to be honest. So yeah, we'll see. DraftKings, Disney, both green on the day again after being red initially at the opening bell. So we'll see what we get. Again, we do have, there's a few things that are starting. Understand, guys, we got a few things happening. Next Tuesday, so this upcoming Tuesday, we have the CPI report, which is the inflationary data report. That's going to massively impact markets. It's going to massively impact markets. It's something you need to be wary for, and we're going to cover the exact results as soon as they happen right here on the stream, just as we did today with the jobless claims numbers and everything else. Let's wait for a dip, and we might buy the dip and kind of attack the Q if it dips down to like the 200 moving average or something like that. We're just kind of scalping around, so we're taking smaller trades. But I think the market might have some momentum today to make that push back up here. So far, we've had a pretty good reaction. And yeah, we'll see if it continues. Again, I'll get some music playing while we're chilling here waiting. Kind of scalping the SPY right now. We just took a little piece off. We're going to cut another little piece here. Scalping the SPY as it pops up. Q moving up. Previous closing price is pretty close. It's right around 299 at 298.97 is that previous closing price level. And so we'll see if we get anything good here. Yeah, the inflationary number should be interesting. NVIDIA green. Yeah, look at Bitcoin pop up. Here's NVIDIA. NVIDIA flying up with the overall market here is really what this is. What else is moving today? PIXY was the other crazy move today, but it ended up pulling back down here. We're going to put the 200 MA and the VWAP up here as well. But again, you guys see why I watched the 200 moving average. There's the Q breaking over the previous closing price. So the Q is technically green on the day now. The SPY, I'm pretty sure is going to be similar. SPY is not technically green yet. SPY's got to hit a roughly 297.78 for the SPY to go green, but it's pushing up there. It's over the 200 moving average. Also, guys, if y'all want to check out and trade the SPY, just like I'm doing here, check out Top Step. Top Step is a funded account program for futures. The futures market has no PDT rule. If I look at the right side here, this is the same price action. So you can see this is the same thing as this. It's the same exact price action, and you can trade the right side here with no PDT rule, short it, go long, instant settlement. And Top Step is a funded account program that's regulated in the US. They give you a demo. If you can hit their target on the demo while following their rules and conditions, then they'll fund you between $50 up to over $100,000 with a 90% profit split. Again, they pay out millions every year. They fund thousands of traders a year. You can get 20% off if you use this link. Great way to help support our free content. There's the link right there. Check it out. We also have the SPY popping up here, getting ready to test the previous closing price. And again, I day trade this. So I day trade these. I buy and sell very quickly. And you can do that in the futures market. Check out Top Step. Really, really useful. You can see on Top Step here, we have been growing our Top Step account. We're trying to get funded on there as well, kind of for fun. I mean, we have 120K in buying power right here on Thinkorswim. But on Top Step, you know, they'll fund you and it's cheap. It's like 160 bucks. If you use my link, you get 20% off of that as well here. And if you look at my Top Step account, let me see if I can get it to load here. I'm having a little lag in the loading here. Let me see if I can get it back. All right, but we're all getting a dip here in the queue. I'm going to buy this dip. That's a sizable dip. I don't mind getting in 50 shares of the queue here. I wish I could get my Top Step account up. All right, so we got a nice little pop here. We're going to go ahead and cut a little piece of this off. Just based off of extension here. We had this big drop, and then we can go ahead and cut it up there. So again, we get this big drop in a bull trend. So we're looking at this and we're saying, okay, what's the likelihood that we're at least going to get a little small pop here? I think the likelihood is pretty high. Man, for whatever reason, Top Step, okay, there it goes. We finally got it to work. It just took a little while to load here. But yeah, if you look at my Top Step account, this is my actual results so far on Top Step's funded account program here. So if you look at this, we're running about 81% out of how many trades? 51 winning trades out of 63. So we have made money in 51% of our Top Step trades out of 63. We've made about 1,500% gross. We're halfway there. We got to hit 3K, and then they'll fund us 50K if we pass the next testing session after that, I think. But yeah, so this is our profit graph here. So you can see same strategies I use in stocks, we're using on Top Step, and this is pulled directly from Top Step itself. And so again, if you want to check them out, I'll post this link. I'll also put the link in the description. You get 20% off if you use them. All right, market dipping down again. We put the Top Step link in the description if you want to check it out moving forward. If the resolution's bad, it's probably on your end. We'll also pin this to the top of the page, actually, now that we think about it. We'll go ahead and just pin this to the top of the page. All right, guys, so market is dipping down some more here. I might buy this dip again. We're going to start it small here with just 25 shares. We're moving back to the 200 moving average. So we're moving back to the 200 moving average. We've got a little bit of a pop. We'll give this a second. We'll cut a little bit of piece there, lock in profit. See if we can add some more if we dip again. Even if not, we don't need to. Yeah, we'll just cut that and wait. Yeah, the E-mini is the same thing as the SPY, essentially. So you can kind of trade both here. Really interesting to do. So there's NVIDIA pulling back to the 200 moving average as well. I think this is going to impact the market. We can also look at like Apple and Tesla here, I think, as well. And so again, we go scalping on Top Step as well. So buy market, sell market, just like day trading. We can go ahead and cut that. Made a little 15 bucks there, but using the same scalping strategies I'm using in stocks also. Hey, thank you. Thank you, Jay. I appreciate you. Oh, so yeah, the conference is still on break if you're looking for it. They just haven't started back yet. Y'all want me to play the rest of the conference, or do y'all just want me to give you the link so you can watch all of it yourself? I don't know how long this conference is going on. We already had JP speech. All right, we're dipping down to the 200 moving average. We're going to take a small position here now. Small position. We got the 200 moving average. A lot of the time, we're going to get at least a little short-term pop there, and that's exactly what we got. Didn't take big enough position here, though, so that's my fault, but we got the bounce that we were looking for initially there. I think my headphones just died. All right, so dipped all the way under the 200 moving average for the market. We're going to have to exit out of these and then get out of that and just chill here and wait. No. I think my headphones are over with. No, too boring? We'd rather hear you, John. All right, all good. All right, I like this big down wick at the 200 moving average. So we're going to start to scale into a position here that we got this down wick as confirmation here. These big down wicks can be indicative of buying pressure. Of course, you never know. This thing might just dump for all I know right here. You know, it's certainly possible that happens, but we're going to buy the little dip here and see if we get a move back up that we could capitalize on. Market tanking down to VWAP area. But yeah, just a rough market. And yeah, big turn of events. We do have a cup and handle breakout pattern here, but I don't think I have enough guts to hold it to that. So we're just going to chill here. Get out break even on the Q for today. NVIDIA dipping down here. If you want the link to this, I got you. Here is the link right here if you want the link to the actual conference. I don't think you can hear the music anymore either. Let me stop this. Put it up, man. Best looking trader in the world right here. There we go. All right, so let's see if we bounce at VWAP. We're gonna wait and see if we get some confirmation in a VWAP bounce. Also, guys, y'all do me a favor. Check out stonk.tech. Stonk.tech is a trading social media platform designed to help retail traders. So if you're part of the Ape community, when they go live, they're going to give you free dark pool and option flow access, saving you hundreds of dollars. Eventually, they're hopefully doing zero commissions. But again, they're a trading social media platform for retail traders to help that community against big banks and hedge funds and all that stuff. And so if you want to check them out, they got some great stuff here. If you look at their about page, they got an amazing team. And if you join the wait list, I'll consider it a favor. Joining the wait list is super easy. I'll post this link if you want to help support your boy. They are a sponsor of our video, so I do have to be honest about that. They are a sponsor of our video, but I'm going to be on there when they go live, and they said that they're going to be going live in late September. And so at the very least, free tools, dark pool, option flow access can get very expensive. So free tools there. Check them out. Market's very sideways, so we're going to withhold trading for now. We're going to chill for now and not push too heavy into this. And yeah, let's see if we get a bounce on NVIDIA here at the VWAP. But the market's breaking all the way back down here. So we broke over the previous closing price, over the 200 moving average, over the VWAP, and now we're just turning down. Hey, see you, Tiny. Have a good day. Thank you for watching. Yeah, CPI report will be interesting. That's the big thing. CPI report's really where it's going to get kind of serious. All right, NVIDIA at 136. Yeah, sorry if y'all hear my landscapers here. They're here right now, so my apologies if you hear them. You think it'll reach 19K? You mean Bitcoin? I think it could. Right now, I'm not poking at anything in the market right now. It's too slow. Too sideways, too slow. SPY sideways, trying to get over VWAP. NVIDIA actually bouncing right at the VWAP here. What did PIXY end up doing? Nothing. Really nothing. Didn't really do much. AMC, another ape. Not doing much. Bed Bath & Beyond breaking under VWAP here. So market's starting to correct a little bit. Here's Apple. Apple down under VWAP heavily. Tesla testing VWAP 200 moving average and previous closing price now. My DraftKings dip buy at 1570s is doing really, really nice. So Ryan, Tuesday CPI data drops. Tuesday. Getting a big rebound over VWAP for the Q. SPY bouncing right at VWAP as well. Oh, I've been muted, man. My bad, guys. So yeah, we've been scalping this. Sorry, we got our landscapers here, so I've been muted. I appreciate giving me the heads up, man. All right, so we're gonna buy this dip again here, right at the 200 moving average. See if this bounces. So we get a little pop here. That's what we want. We got an initial pop. Dipping some more here in the E-mini. So kind of lost any gains we made. Coming right back down. Rejecting at the 200 moving average here. So we're just trying to be patient. And hopefully we get a big down wick and a rebound here. But we're just trying to be patient here and hopefully get something favorable. Looks like the market wants to head back up. Getting a pretty sizable drop now. We might have some extension here. We can buy this dip. but we're going to go with 25 shares and not take anything too crazy. We're in an upward trend, but we're kind of consolidating back and forth so far here. We break under this. I'm really not going to like that. I'm just kind of move to bearish, but for now, we could take 50 shares here in the SPY and see if we get a rebound quickly. There we go. We're going to cut a little piece of that. Big down wick here. All right, so there we go. Just made a little bit back. Small trades. GameStop moving up. Yeah, GameStop all the way up to almost 26. Huge rip. Wanted to jump in this. Got in this a little bit late, so I didn't really quite catch it. I'm going to wait till we test the 200 moving average here first. Okay, we tested it. We're going to kind of scale in now when it dip to the 200 moving average. But there's a big, big pop. There we go. Just ripped. Cover a little piece there. All right, getting some bullish strength coming in now. Held the VWAP. GameStop pounding up. At 298.30s right here, guys. 298.30. So we're moving up big in the SPY. GameStop is making this big parabolic rip back over 26 now. A little bit of a down wick here. We're actually going to buy into this. I think this is kind of extended, unless some bad stuff is being said right now, which I guess is possible. I should probably check that. Let me see what the conference is doing right now. Okay, yeah, somebody's speaking here. I don't know what they're saying. The market might be a little iffy today with all these Fed speeches going down. I like the pattern here. This is a bullish pattern. I mean, we're over VWAP. We're holding that level nicely here. Yeah, you might not be able to hear him. Somebody was just kind of like, who's chopping down trees earlier? And I was like, oh, that's my landscaper guy. So yeah, break even again. Kind of chopping back and forth. It's kind of a break even day on the SPY and Q. I actually really like the SPY trend, but I think considering we got the meeting going on today, that there might be some impacting things said that's going to cause there to be little edge in the markets unless you're piggybacking off of what they say. You know, and so with that, I think it's important right now to just be very safe and trade small. We got somewhat of an upward trend, but we're kind of moving back down to neutral pretty quickly each time. Getting a little bit of a rebound here. Maybe that'll be some upward momentum that we can capitalize on. I don't mind this. Dollar is dropping a little bit. All right, guys, market's bouncing a little bit, consolidating between VWAP and the 200 moving average here. GameStop dipping all the way back down to 25.50s here. All right, market's getting a little choppy, not terrible, I guess we'll say. So it's not that bad. All right, guys. Today, let me make sure we got this right. All right, so market's still trying here. Let's see if we get anything better. Market's starting to pull back a little bit, going choppy back and forth. Market dipping down again. All right, so market popping back up again. So yeah, very choppy last few minutes here, but you know, hopefully we get some good stuff going on today. I'm hoping we do. And again, thank you guys so much for helping me hit 84,000 subscribers. It's amazing. Market's starting to fly back here. So the market is starting to rip back up. All the way up to 298.70. He's about to test the previous closing price again here, guys. Previous closing price is getting tested again here. Yeah, so again, let me know what you guys think. Market started to test the previous closing price. Do you think we're going to break it? Yeah, all good, Pawn. I appreciate you, bro. Thank you, sir. All right, guys. So we are going to go ahead and pivot to our crypto show that we normally do. So yeah, market's flying up. Again, let me know if you think the market's going to hit green. Again, thank you guys so much for helping me hit 84,000. We're almost up to 84.1K just on today's stream alone. So thank you guys so much. We got some big stuff going on today. Before we move on, though, y'all go check out Alpha Insider, guys. Alpha Insider is a really interesting platform. I've been checking out this guy right here, and I'm just really impressed with this dude's strategies on Alpha Insider right here. Look at this guy. This guy on his pivot point reversal strategy is up almost 1,000% over the last 5 years, up almost 50% on the year alone. 18% on the month, 8.3% on the week, almost 5% on the day. And every time I look at this dude's trades, he's making money, and he's trading mostly ETH, pivot point reversals. And so again, this website is called Alpha Insider. It's super useful because you can find traders and you can document your own traders, kind of like TradingView, but instead you can use it to document your trades, figure out what you're doing, figure out what other people are doing, and you can subscribe to traders so you'll get alerts when they take trades too. And so just really, really useful, really, really interesting way to follow traders and to document your own trades. And again, really interesting website, completely free. They are a sponsor of our video as well. And we try to keep all our plugs consolidated toward the end of the stream here, guys, since we don't want to really flood you guys with plugs at the beginning. But if you want to check out Alpha Insider, here is the link. Check them out. Great way to help support your boy here and support this channel. And yeah, we'll put the link in the description as well. With that said, guys, we're going to go ahead and pivot on over to the crypto stream we're doing today. We do have a crypto stream doing that we're going to be starting very soon. And so we're going to be doing and talking about some of the stuff that happened in crypto. We know GameStop had their FTX deal yesterday. Q just broke over the previous closing price, for the Q. And let me make sure this is set. And again, then we're going to go ahead and pivot right on over to our crypto stream, guys. So we'll see you guys over there. You don't have to go anywhere. As soon as I close this stream down, our crypto stream is going to revert you straight to our crypto stream. If not, it's youtube.com/beginnercrypto. Give it a subscribe once you're there. We're trying to hit 1,000 subscribers, and we're pretty close. And so, yeah, we'll see you guys over there.